of Home Depot. This is not a recommendation. I have no idea where the stock's going. But history tells us when this stock has gotten weak, it usually recovers from that weakness, even though this weakness is a little different than some of the others.
Yeah, no, I completely agree. And talking about the divergence just between Home Depot and Lowe's, whenever you look at our web data, which I think that this is another indicator to show, when consumers are looking to purchase something for home improvement, where are they going? We're seeing a larger mention volume going to Home Depot versus Lowe's. So when you look at that overall consumer mind share, and then also you can see the split here. We see web visits are up by about 6% year over year for Home Depot, down by about 3% for Lowe's. So a little bit of a split.
That was when I drew when I
just another
originally got those
indicator
calls.
for us, and especially with shares trading so much lower, that maybe there is some building confidence from the consumer's perspective with Home Depot. When given the choice, it does seem that more consumers are opting for Home Depot versus the Lowe's.
When you look at the happiness levels, I think that's always a big concern. Lowe's has made some inroads, taken some market share in the pro division here, Megan. But when I look at their mentions count, typically we don't see that divergence as much. We did maybe, I think mid-chart of this. But do you expect that to continue? Because it seems like, as you mentioned, your mentions are ticking up, and that's a positive, right?
It is. Our mentions are ticking up, and it's nice to see web visits ticking up alongside those mentions. From a happiness perspective, actually pretty close in our universe. Believe it or not, Lowe's is actually a point or two above Home Depot, both really close to 70% positive. So in our universe, that's pretty positive. Consumers are generally having a good experience when they go to either retailer. We do see that Lowe's it's doing well, but you've got a lower sample size whenever you look at this. So I think it's important to keep that in mind that, overall buzz, Home Depot holds about 77% of those mentions versus a Lowe's in our universe, and that's much larger. So, we do expect to see a little bit of tempering there when it comes to happiness. So I think that the important indicator for Home Depot is that their happiness is improving. It's up by about a point, which isn't much, but it's not going down. And especially alongside those other metrics, it helps to give us a little bit more of a cautiously bullish approach to this name.
And Megan, just real quick, this is a typical retailer, right? If the consumer's feeling good, they have a job, and things of that nature, you typically see positive data on this, and it could easily turn if the unemployment rate continues to move higher or the consumer starts to pull back, right?
Yeah, you're exactly right. And so that's something that we'll continue to monitor, especially into this holiday season. Our consumers continuing to prioritize travel and experiences. Are they starting to shift and spend a little more in areas like a Home Depot or a Lowe's? So far, we're starting to see signs of optimism. We're starting to see signs, at least in Home Depot, that there's some building consumer strength, and we'll certainly be monitoring to see if that follows through.
All right, great stuff, great data as always. Have a great weekend, Megan.
Thanks, guys. You too.
All right, that was Megan Brantley, Vice President of Research at Likefolio, breaking down the positive data for us, Kevin. I did want to make one note, Kevin. Margins shrunk about 8 basis points last quarter. The theft in some of their stores, it's become a real concern. But this is one shareholder-friendly company historically, Kevin. Between increasing dividends and buybacks, they just announced a new $15 billion repurchase program last quarter. They're very shareholder friendly.
Home Depot returns about 55% of their earnings back to the shareholders in one way or another, Tom. So you're right. They give a lion's share, much more than
you are in the multiverse of live streams.
By the way, they only give 35%
this is
of their earnings back
the
to
variant.
shareholders. So a really good shareholder-friendly company, and a
over
lot
the
of their
world.
numbers are just
We watched that show, Loki.
Solid.
It's pretty good.
I'll read them to you. Efficiency,
good show.
return on invested capital near 40%. Valuation, trading only 2 times sales right now, Tom. A year ago, it was 2.2. PE of around 18. Historically, September, it was 21. So it's low in terms of valuation. Their numbers are still strong. And if you look, like I said, put up a long-term chart. This stock does correct.
AMC 7.25.
It's usually outperforms once it's done correcting. When it's done correcting, Tom,
That
I
high.
have no idea.
All right, but you got an example
Love
trade.
it.
You got an
Make
example,
sure.
yeah,
It's been
example
such a-
trade for us here, Kevin. That
Such
kind
a
of
weak
sets
rally,
up
though,
with
really.
Likefolio's
This
data.
huge
Go ahead.
sell-off.
Yeah, exactly.
Whack.
Something with, we wanted something, your ability to buy this underlying down here. This is a practice trade in paper money,
Dude, I
but
forgot
we're
about the
looking at
table.
if you wanted to get very similar to Joe's trade, about 45 deltas in Home Depot, but a different way. This is a pure diagonal where we buy the December 1st, I believe it's the, let me widen this out.
290.
It's the 290 call
Yep.
out to December 1st. So it's a 3 diagonal spread selling next week's no 302.5 call, which is in line. Why did I choose 302.5? In line with the expected move for next week, Tom. So that's the tools that you use on the Thinkorswim platform to maybe decide what strike to use. You could be a little more aggressive, less aggressive, but I chose right in line with that expected move. Right now, it's Tom, it looks like it's trading about $11.50, something in that range. But this collects a little bit of theta, Tom. It allows you, like I said, 45
So that time,
deltas.
the
but it's
stream
at a
dropped
much
because I had a power
lower
surge.
level than buying the stock. Now,
Yeah, 'cause my internet went
the
out, everything.
alternative is to buy the stock. That's gonna
It's weird,
cost
though.
you
Nothing
more.
turned
But
off.
like I said, you and I were
There was just
talking,
enough of a power
it is
surge
a,
to kill my internet.
pretty, nice dividend stock,
And, like,
something
this
that
fan
they
running,
return
like,
a lot of,
slowed down and
money back to shareholders. So you have to weigh that. But this
Anyways,
one,
yeah, that was right when I was
in
trying to
terms
close
of
my
capital
positions
efficiency,
too, so I had to get on my
much more
phone,
efficient, Tom.
shut off the
Let's
Wi-Fi,
break this one down.
get it
Buying the
on
December 1st weekly
mobile
290
data,
strike call, and then
open up
selling
the chart
November
to see what was
10
going on,
weeklies that expire in 7 days,
and open up the
302.5
other
strike
Thinkorswim app,
call. So
figure how to
basically
get,
a
yeah.
$12.50
So,
wide bullish call diagonal.
not to say
to
it
the
cost me a whole
upside,
lot
paying about
because I was
$11
able to get in there
debit
fast
we've
enough,
got
but
here on a risk profile. The stock has moved a little bit higher, so it'll cost you maybe about 40-50 cents more. But you get a break even around $295.
wait for it to come back. I know,
on this one,
I like to
Kevin.
wait.
The debit
mean,
that you pay, the $11 debit, that's your risk.
Yeah, I like to not start a
$100
show
per
that only
spread
has
on that. You'll
one
have the
season,
opportunity over the next
necessarily.
7 days to roll or adjust that short option. But
Or
you can
at
see
least
this is
one
a
that
bullish
has
trade.
more than
You're
just a few
taking
episodes.
advantage of buying the higher
So yeah, I'm
delta
still
call.
watching
Kevin
it.
mentioned the positive
We're
delta
season
this
2,
type
I
of
guess.
strategy has. That means as the stock goes up, right?
Guess there's only,
you
what,
benefit
2
on
seasons?
that
3
with
seasons?
positive delta to the upside. But
There's a little
28
min bet.
days to expiration on your long option. You do
I've not
have
played
some
this table. They don't
assignment
know how I
risk
play.
on that short 302.5 strike call into expiration over the next week. Also, so keep that into consideration. Earnings on the 14th of November, so that could be a catalyst to the upside here based on Likefolio's data. All right, Kev, good look at a call diagonal in Home Depot, but
Just
when we
call,
come back,
maybe that'll
we're
get
gonna
her
take
to
a look
call.
at its
Ah.
competitor, Lowe's. The stock of the home
Now,
improvement
ah,
giant
shoot.
has struggled so far this
Well, it
year.
definitely has a
but
flush
seen
now.
A nice
Mine's
jump
probably not high
so
enough.
far this week. Fast Market's coming right back.
I mean, you're gonna go all in. You know it. You know it.
My
I
dad
know
was
it. You're bluffing. So I want this to break into this channel, and I want a shoulder. Really break below this channel's what's necessary for me to think there's any kind of reversal going on. Get some cards on this table. Any straights out there? My 2 pair. Didn't have a straight yet. Pocket queens. I landed a full house. What was it? Oh, sevens. Let's see if we're getting a divergence now. Yeah, now we have an RSI divergence. A big old fatty one. Alright, green candle back into puts. Oh. I did this yesterday. I like the divergence play though. Try and wait. Need to flip this to the 5 minute, we're too far down. 12:45. Test back in that channel. See if we retest the top of this channel.
Back down to 4.5, and you got the 2-year to 4.78. Now, although we have pulled off the highs that we saw just last week, I want to point out that last October highs, the levels that we just ripped up and through, that was, well, in the 30-year, that was around 4.4. So we're still holding above that. Keep in mind that old area of resistance sometimes becomes that new area of support. So let's keep an eye next week if we continue to come off it. Right
I'm
around
gonna
that
slow it down a little
4.4
bit,
level
see if I can
for
get
the
some
30-year,
bluffers.
10-year right around 4.3. That's the old October last year highs. So again, as we pull back, does that old area of resistance become new support? Lastly, I want to point to the US dollar, 104.84, Tom. It was just a few days ago, it feels like we were up around 107. So yeah, big move lower in the dollar.
Re-raise, re-raise, re-raise.
Seen in the yen and in the British pound.
Nice.
The yen, the first week we've seen higher in 5, and since
I wish
July,
that guy called.
Tom, it's only been up 4 weeks. So strength in some of the other foreign currencies. Treasury is to the downside, or I should say yields lower. Treasury futures to the upside. That's going to weigh on the dollar, and it has been.
Yeah, I'm not gonna buy into that yen story on the dollar.
I'm gonna start scaling to these
yields
puts.
Falling. This is about the dollar falling. This is
Burned
about
so much
risk
yesterday,
on
but
at this
I like the
point.
RSI
So
divergence.
I'm gonna equate that move in the dollar to the markets, the equity markets, and the moves in yields, and not that yen. We're not going to talk about the yen here. All right, thanks to Ben Lichtenstein, host of the Future Show here on the
I have
network.
a head and
breaking
shoulders
down
up here,
markets
but
for us. But now let's bring in George Tillis, senior markets correspondent. George, we talked about Home Depot with Likefolio. Now we're talking the competitor Lowe's. Stocks off a little bit so far this year. But still up about 6% this month. I mean, comparable to Home Depot, you know, maybe it's cheaper on a valuation basis, but maybe it doesn't have the scale that Home Depot does.
Yeah, that's true. I mean, that's exactly the point. When you look at the two companies, it really comes down to margins and scalability. Home Depot obviously has more scalability, being the larger of the two companies. But if you look at the price performance, at least on a 52-week basis, we've had a great week, obviously, but you know, Lowe's is higher by about 9%. Home Depot is relatively flat. It's higher by about 2%, but it's been underperforming Lowe's, and I think that has to do with the fact that if you look at Lowe's valuation-wise, it's actually about a third as cheap relative to earnings compared to Home Depot. But one of the things about Lowe's is it doesn't have the same scalable profit margin that Home Depot does, and so its profit margins are about 350 basis points lower than Home Depot.
can build
I
a
think
shoulder
as
over
they
here in this
expand
channel.
their pro division, their contractors division, they're going to get more sales per unit, or in other words, more operating leverage on a store on a per store
Tapering going
basis.
on.
But even if you look at the other thing is the earnings. They're coming out in just a few weeks, November 21st. They're actually expected to be down both in sales and earnings. $3.08 is the estimate. That's going to be down close to 6% compared to last year. If you look at sales, they're also expected to be down quite a bit. 21 billion is the number versus 23.4 billion last year. So that's about a 10% decline in sales. But looking at the trajectory of earnings,
neg, yeah, I mean, all the beaten down stuff has just been ripping lately, or today and yesterday.
Perhaps the low point, because you have to
They
think
have
about
earnings. I think they had earnings yesterday,
the
maybe.
aspects of home improvement. You know, that's more perhaps discretionary. We know that existing home sales are relatively flat because of the fact that people seem to be trapped in their homes. But the new home construction, as well as multifamily construction, is still very robust. But that really comes into play from a contractor's perspective,
people want to discuss
not necessarily the DIY customer.
Something to discuss. And it's back on charts, so we can look at historical TA.
You can't help but compare the two.
I don't care to, but
when I look at the comparison,
is a possibility.
Return on invested
back in
capital,
trading too, and
40%, Lowe's 30%.
I don't know, Yahoo Finance.
Sales, Home Depot
it's not on Webull yet.
Up 3%, Lowe's up 1%. The return to shareholders, Home Depot 55%, Lowe's 35%. So if you're going to look at home improvement retail, most of the better numbers are showing up at Home Depot versus Lowe's. But Lowe's is a smaller company, and it's clearly number 2, so maybe they're trying harder. And that thing you just mentioned about do-it-yourself or professionals, that they're trying to get away from some do-it-yourself and go towards more professionals, is that what Lowe's has to do to cut into Home Depot's lead here?
Ooh.
Yeah, so that's the thing. In order for them to remain competitive while at the same time grow their business, they have to obviously provide services that their major competitor does. And I think the growth story for Lowe's is not necessarily the number of new stores.
Oh, the
both of the companies
out there.
Are expanding quite modestly.
Higher 2-pair. Wait, what? I wasn't even thinking about that 2-pair.
It comes down to how many dollars can you generate in sales on a person
I wasn't even thinking. I forget that.
And Lowe's has the capacity to improve that because they're lagging behind Home Depot when it comes down to their pro or contractors division, but also services. You have to think about repair services, maintenance services, handyman services. These are services that Home Depot supplies the marketplace, installation services, and Lowe's is still playing catch up in that regard because that's been a great business additive to Home Depot's core DIY and contractors business. So I think there's room for growth in Lowe's at a higher clip than Home Depot. And I think maybe that's what the market is telling us just based on the outperformance of Lowe's versus Home Depot. And that's, again, going contra to what you mentioned in terms of the return on invested capital and equity, as well as profit margins that Home Depot has, which is again, as I mentioned, higher than Lowe's.
All right, great breakdown here of Lowe's, comparable with Home Depot. We'll see if this rebound continues. Interest rates definitely helping both of these names so far this week. All right, thanks to George Tillis, senior markets correspondent here, breaking down the backdrop of Lowe's. Kevin, when you look at this company, 2.2% dividend yield if it gets paid out. They continue that, but this is one of those historically they don't cut their dividend. They haven't since they started it, I think over 45 years ago.
CEO Marvin Ellison, a Home Depot alumnus, went to the Gap, and now he finds himself back at Home Depot.
If you had a double top up here
for a while now, so he's starting. He's into it now. He's competing with Home Depot.
It wasn't completely liquidated, the NOLs.
Their stock really outperforms, but right now they're in a competition where Home
quite
Depot
a few stores are unaccounted for,
numbers, and it's that pro contractor that they need to cut into, Tom.
Yep.
Discussion.
An example trade here.
Possible that the shareholders are going to get equity in another
taking advantage of that dividend
company.
if it gets paid out here.
A lot of
where I just looked at covered call position where
A lot of
for every 100
unusual
shares of stock
activity
that
that
you
went
buy,
on,
you're selling out of the
that
money call to
bankruptcy
the upside
that would lead you to believe.
against it to offset some of the costs in it. So your cost basis on buying the shares is lower. Now, it
There's
limits
another-
your upside also.
Another company that's going to take it over and would most likely take the shareholders with their their NOLs on their back. That's the only way they can have those.
They've got earnings on the 21st, so implied volatility elevated
understanding at
in
least.
that series. You sell the 205 strike call in that option series against it. You're paying roughly, we've got about $192.40 debit on that. It might be trading a little bit higher because the stock has ground higher since we started the show. But if you pay $192.40, that's going to be your break even on this
There's
one.
a straight out
and
there,
your
but
risk, if the stock were to somehow go to zero,
gotta put this guy all in.
$19,240. Kevin, your thoughts here on taking advantage of the higher implied volatility, but a covered call strategy. If you want to own the shares, you can offset some of the costs and lower your break even, right?
Got this straight.
Yeah, similar trade to the diagonal, except you're buying the underlying,
close.
selling the out of the money call. You get a bigger delta. You get access to the dividend, but the trade-off is it costs you more money, and you're holding the stock. It's a little more risk to the downside, like you said, zero, but you get that access to the dividend. So more of a traditional portfolio look, and maybe everyone's first trade out there, if you don't trade out,
get a mean reversion today?
Should be a covered call, Tom.
Yeah, option if the market's open, liquidity is provided. That creates more credits, lowers that break even, increases potential profitability on this type of strategy. But this is a capital intensive strategy. If you have to want to own the shares, but you're capping some of your gains, but you're also creating yield not only on the potential dividend, but then also on the short call that you're selling against your long stock. Kev, real quick here, we got about 30 seconds. Give me your take, your outlook. I mean, strong week for equities, and not a lot of data next week.
Really light on economic data, Tom. Good point. But 1,653 more names. 53 in the S&P 500, 14 NASDAQ, 1 Dow Jones name, just Disney. What does that mean? 670 names in the Russell coming out with earnings next week, Tom.
Yeah, we'll see if this momentum can continue to the upside for equities. All right, that's going to do it for Kevin.
Your shares weren't sold, they just
but stick around right here on the
aren't
Schwab
showing
Network.
up in there anymore.
Next Gen Investing's coming up.
So, yeah, I think there's still an opportunity. You might get something. And I think you should know for sure, though, this month. At one point, I was trying to buy shares once I was on the expert market. If you were around then, I would have bought some of your shares, Phil. But now I can't buy any because it's just a record of shares. Unless if maybe you DRS'd them. I'd be curious. I haven't heard about that at all. People that DRS their shares, if they're still in there. Oh, of course. And it's straight on the fold. There were shares are still showing up in the DRS brokerage or whatever. Okay, that holds them. Some out of flush. It's a good thing. Then I might be interested in. I was gonna pay a premium too, like over 100% of the last trading price. RSI divergence is still blaringly there. Which can go away. Because you can have a big rip here, or we are going to have a mean reversion. imagine with that RSI divergence sitting there. I mean, it doesn't have to be rip, it can melt up, but starting to rally. Let's see if it breaks this channel. Looks like you get calls. Could have gotten calls.
Pretty nice reaction to that jobs number this morning. That
Can
has
I
held. Actually looks like it's picking up some steam here as I've just been watching Apple all day long, waiting for it to turn positive because it is erasing some of that initial weakness after its earnings.
It
Oh,
just
wow,
seems
big
like
call.
this
Whoops.
is the script every time Apple has disappointing earnings or what the initial reaction is disappointing, Jenny, that buyers come in and, we looked at this stock yesterday. We looked at a
2.7.
neutral range-bound strategy. We kind of set up that as the potential
4.5.
narrative. Hey, it might be disappointing. but
Straight
buyers
almost
come
landed
in
there.
And, so far, that is exactly what has happened. The stock was below 170, I think, at some points yesterday in the post-market.
Probably better I wait
169.33, but it
for
has
this thing to come
steadily
down.
climbed now to just down $1.37 on the session. It's less than 1%. Now, granted, the overall market, as you see on the screen, is very green, so it is still disappointing. But at one point, this thing was down like $8.
Too high flush? Let's do
the
it.
initial reaction.
Yeah, and no kidding, we're pretty much just off session highs here. I mean, the Dow now touching session highs, so seeing some strength, and that strength looks like it's holding as it's been pretty positive throughout today's session. But as always on the show, we'll be focused on the individual movers. A lot of pre-earnings looks to get through today. We'll kick things off here with our upvote and downvote segment.
have
Following
it.
that, we'll chart and trade those
I don't have a
upvotes.
flush, dude.
Our FOMO discussion today is a name moving nicely to the upside. That is DraftKings on the back of some solid growth metrics they gave now for the remainder of their fiscal year. And then, of course, we'll discuss all things Apple as the analysts do still seem pretty positive. Perhaps some of the growth long-term looking lackluster, but as far as I could see, it did seem pretty positive from their fourth quarter report. Last but not least, we will look at NEO laying off 10% of its workforce, but still higher on the session. Amazingly
There's a
enough.
new high on SPY.
Up a lot
See if it
now,
rejects
too. It's
that.
up about 3% earlier. It's up 6% now. So we'll talk
Resistance.
that later on in the show. Looking forward to the NEO conversation. Jenny, we're about 80% through the
bust
S&P
through it.
500 earnings now. Slightly in the green in terms of earnings growth. There's been 3 straight quarters of earnings declines. So looking to snap what's been a pretty brutal streak for earnings growth for the overall market.
Been making a third divergence,
we'll
actually,
see if they can close
technically.
it out with so many of these consumer facing names still left on the calendar. But let's do upvote, downvote, not endorsements, not recommendations. A little bit more of a media focus here today. Where do you want to start? You want to start with Paramount?
Paramount is up 14%. It's a good place to start, actually, to kick things off on a positive note, and it's actually making double-digit percentage moves for its second straight session on the back of some strong results. They recorded third quarter adjusted earnings of around 30 cents a share. That was down from a year ago, but did beat expectations. Revenue also coming in better than expected, slightly, but rising on a year-over-year basis. They also announced a program to repurchase up to $1 billion worth of their debt, saying that in the fourth quarter, advertising growth will continue to be impacted actually by a sizable decline in political advertising, also highlighting those strong viewership for the NFL on CBS and strong gains at movie theaters driven by franchise films like Mission Impossible, the latest installment of that was released earlier this year, as well as Teenage Mutant Ninja Turtles. And it's amazing to me because we're talking all media-focused stocks here to kick off the show. Paramount is still down about 21% here on the year. Of the media coverage we're focused on today, this actually is the least favorable of all of the analysts covering it. 22% rated at buy.
Did respect that that channel.
That's bad.
Yeah, it's been struggling.
That is
I know
nice.
we've seen stuff
Nice bear signal.
with this whole industry and kind of content creation with strikes really weighing on some of them more than others. But what I found fascinating is we've oftentimes talked about, and it is the case typically when it comes to equities and companies, Jenny, that names, let's say, grind their way
I have a
higher,
flush or
and then if
straight.
there is some type of negative news, sometimes you'll see rapid repricing to the
I'll
downside.
let
So
it
this
go.
idea that,
Dang.
you know, the stocks climb this wall of worry
The hard
and then
two
they
pair
kind
to
of
fold.
crash when things are disappointing. Well, it's the exact opposite, at least in the last few months when it comes to Paramount. This thing has just exploded in 2 sessions, working its way all the way back to where it gapped down to on September 1st. So basically 2 months of trading just made up for in 2 sessions.
And to speak to that analogy, I was reading an interesting article that said the term is that it's an escalator up and then it's the elevator down.
It sounds so more, again, I love that.
It's pretty morbid, yeah, because I mean, that hasn't really necessarily been the case for all these names. Now, our next name is a name that has been pretty disappointing in its own right. That is Disney. And Disney has just been, I mean, ever since Bob Iger took over, I'm not blaming him, but the timing of that has just not been in his favor. Now, what we know as far as
Look at that
Disney
candle.
will report next Wednesday after the closing bell, when you compare them to Netflix,
Getting pretty
which I have a
jumpy up
difficult
here.
time doing because their parks and merchandise is still a huge portion of their business. But Netflix gave really strong guidance. They raised their free cash flow outlook. They announced more price hikes for this year. So now going to Disney earnings, the bar has been set relatively high, but I guess in Disney's own right, they are in a completely different position as far as pricing goes on the year. So that might be to their advantage. Analysts, though, have been bearish for this quarter for quite some time. Zacks is estimating earnings of around 69 cents a share. Now that would be down roughly just 12% since August. So we're seeing a lot of revisions to the downside. This would reflect a sizable 100% recovery on a year-over-year basis. But top line expectations haven't seen much movement, with around 21.7 billion expected. That would be down fractionally for about 0.5% from the same period a year ago. But all in all, Disney Plus is going to be the focus, I'm sure. Disney Plus subscribers stand at around 146 million. That reflects an 11%
I want to get those
decline
puts so bad.
From last
Been
year.
burned so much
quite
today
different
or
from
this
Netflix
week.
in its own right in that way, because Netflix saw subscriber growth. Disney Plus expected to lose subscribers yet again. But the company has fallen short of their subscriber estimates now for back-to-back releases.
Yes.
So snapping that positive streak of actually beating. So they need to see if this could be any sort of optimism they needed at this point, because we're hearing they're discounting their park
Oh my gosh, I almost didn't call.
They're trying to get ways to have people travel again to
I was going to
their
raise,
parks,
but then I decided
I
just
do know, well, I haven't been to a Disney theme park in quite some time, Alex. It is not cheap.
It really is, and I don't anticipate going anytime soon, to be honest with you. But when it comes to Disney Plus, it'll be in focus. It's still the biggest of the streaming platforms that Walt Disney has. However, like you said, 10% lower if it just comes to where the expectations are, which are modest sequential gains to 147.35 million. So we'll see if it can deliver on that. Doesn't seem like the story is ultimately all that positive on that front. But it does continue to be relatively positive when it comes to
this
ESPN
rando.
Plus, which is of course much smaller, but looking
Guess
for
I got
continued growth
most
both
to
year
win.
over year and
Didn't have much in there, never mind.
Plus,
Did nothing in there.
Bright spot as well. It's been a little bit flatter, I would say.
Wow, 43 million. I don't think I've had that many chips at a table.
If it comes in at 49.2, it would be about a 4% gain in subscribers year over year. So those will be the focus on the streaming front. We know that the focus for the business has been kind of reshifted to parks. But that's a tougher story, I think, to sell investors right now, just because it isn't a growth engine necessarily. It's more of a cash engine, and those are different discussions.
Yeah, that's a really good point. And I mean, quietly, Disney's up, though, 8% this week. So having a really nice week on the back of, I think we're seeing a strength across the board today, led by Paramount. But our next name also getting a nice lift today. That is Warner Brothers Discovery, which is also pacing close up this week, 23%. I mean, that is amazing. They have not, though, had earnings. They've not posted positive
I don't know,
earnings
but
since
we
the
might get our
first quarter of 2022.
reversion today.
Next Wednesday before the market opens. But what's amazing is, despite not having
get a wick on the top of this candle,
they've kept positive cash flow. So I did do some deep research on Warner Brothers Discovery today, Alex, and I was way too in the weeds on some of
what did we find?
The profit and losses. Okay, and I can make the case either way, but just for sake of example purposes, I can understand the bullish conviction here, because if you look at Warner Brothers Discovery versus their peers, say like a Netflix or a Disney, using the last 12 months of data, all three are generating very similar free cash flow. Warner Brothers Discovery, though, is worth around 1/6 of Netflix and almost 1/8 of Disney. So, I mean, keep in mind,
Oh, it's
Netflix
definitely
does
starting
have
to
around
taper,
2.5 times the
right?
number of subscribers, and Disney does have double
Isn't
the
just,
revenue at around 1.5 times the number of subscribers. But still, I mean, right now,
Bulls
if you look
building
at its
liquidity, I don't
valuation,
think.
Warner Brothers Discovery is relatively low.
Maybe a little more price action to
primarily just
confirm it,
because
but
they're a more leveraged company versus
looks like
their
that to me.
peers. But then I was reading a lot of the more optimistic analyst notes that say perhaps too much pessimism.
Plenty of time to short this, though, if you want. Wait for
companies.
breaks
I mean,
of-
they have so many
breaks of
under their
these
umbrella. Think
supports.
HBO, Turner
Got a shoulder over
Broadcasting,
here. If you got a
Warner
head,
Media,
you could
TNT,
wait for a break of this
Cartoon
support.
Network, New Line Cinema, and CNN. So they
Just
do
that
still
desire
have
to
sizable exposure.
really
but
get
what
in at a
will
nice
be
price.
A huge benefit is if they're able to post
Heavy,
any
but it'll
upside
cost
to
you.
HBO Max.
No time to
actually,
top.
because I feel like all that matters to the street is these streaming services.
You know what's nice too? If you invest in Netflix, you don't have to worry about investing in Cartoon Network and CNN and these things that you're talking about
TNT.
that have been potentially dragging on the stock. So that's why you've seen the stocks like Netflix, not the fact that they're
It's Friday.
overperforming
Should be some
when it
profit
comes
taking, right?
to, you know, where they are in this market, but they don't have the legacy businesses dragging them down. That's the big story here. Not profitable on a diluted adjusted
Trying to talk
EPS
myself
front.
into
At
this.
least that's not the expectation. Look for a 6-cent loss for WBD. When it comes to HBO Max, or just Max now, this has always been a model when it comes to HBO of big show, garnering, or catching all the attention. What is it right now? What is the show that they're selling us? I don't know. I don't even know if they have one. It was Game of Thrones for the longest time. It was all those other, from Entourage back in the day to others. I couldn't tell you what's going on in HBO Max right now.
You know, that's a really good point, and I will say Oliver Rennick is our HBO enthusiast, so he would perhaps know better what is streaming. I am not up to date on what is cool in the streaming world right now because I'm only subscribed, I think, to like Hulu and Disney Plus at this point. But that's a really good point because I do feel like there's a seasonality to it. When they have a big show, it's a killer. But then when there's a lack of show, it's like, are you still subscribing to HBO?
Or it's like when that new kind of spin-off of Game of Thrones came out, and then you'd see the posts on social media in New York, and it'd be like every TV was watching the intro at the same time.
Yeah.
How long did that last? 2 weeks, and then that show lost its momentum? So they got to figure something out. They got to come to something with the market that just captures the audience that they had in recent years. They don't have it right now.
And I think with the strikes that have been going on all summer, I mean, that's not helping their content pipeline either because I'm sure we'll have some production delays that's already been hinted at by several other companies. So our last name today, though, is Alphabet. But what I wanted to focus on specifically to keep it media focused here is YouTube because we did get some news yesterday. YouTube has announced a price hike for its premium service in 7 countries. This is just weeks after hiking the prices in the United States. So some of these countries include Argentina, Australia, Austria, Chile, Germany, Poland, and Turkey. But the rate change does affect their YouTube Premium and Music Premium's individual, family, and student plans. But the pricing is pretty substantial. I mean, the biggest shock will be
See that other hand?
in Australia. I was
I
seeing
got pretty
the price
fortunate.
increase for a premium family subscriber.
I mean, I had a good flop, but that kicker was bad, and
$33
a lot of stuff could beat me.
That's almost double.
Buys the
So
bottom
this
here.
increase
Let's
in
see. It's
international pricing
back.
does come
Is it back
on
in
the
that
heels of a
channel?
decision they
Yes.
made earlier this summer in the U.S. In July, they did quietly raise their subscription fee from around $11.99 to $13.99 monthly for new subscribers. They're also cracking down pretty substantially on ad blockers globally as they look to push users to either watch ads or pay for their premium subscription. I will say, of all of the subscription services, though, we are both fans of YouTube Premium because it is worth it to me.
Well, that's YouTube TV, though. This
you're
is
right.
different. This is so you can like minimize
I got-
the
I don't
YouTube
like to get
app
them
and
on,
listen to music without having it open. This is so you don't have
on
ads
red candles,
on your
but
YouTube videos.
I did.
You have an option. That's the traditional way of interacting with YouTube.
My
I
best.
think it makes sense. I'm not sure.
Last trade
that
on
it
this
deters
account
those
today.
who avoid the ads, who want that ability to minimize those videos.
Hope
and
it
have
was
play
the
in
right one.
background. But for me, I'm okay with watching the ads and hitting that skip ad button 5 seconds after. Got to be vigilant. You got to be ready. But I'm ready to do that. YouTube TV. Now, look, if you're
Get a gap fill. That'd be.
Charter Communications,
That'd fix my
if
week.
you're, Cox Cable in kind of the Omaha region. That's one of the legacy ones that I know. If you're CenturyLink, if you're any of these companies that's traditional,
we'll take some profits, or start to.
Access to cable.
Bottom of this
TV,
channel.
YouTube's got you in the crosshairs right now, and
Cut.
with the ties
Stop
to the
loss.
NFL, through NFL
Fortunately,
Sunday
it's probably
Ticket,
up here.
I don't
Just
see how they don't
or
become
should have entered
a
it, but
formidable force in this space in
The
short
confidence
order.
levels
And,
are
I mean, all
negative.
the sports on right now, it's truly the best way to watch. I mean, I can't rave
This
enough
week,
about the various
today,
ways you can
from
watch
this week.
every single sporting event that's happening right now because there are so many. But I'm more of a passive watcher, I will say, that when it comes to the ads, I just watch them. I don't mind that at all, and I'll keep paying less to watch
Paint
those ads.
an
But
apartment.
we'll be looking
Paint
more
a hallway.
at our two names that still have yet
Nice.
to report some of their earnings, that being Warner Brothers Discovery as well as Disney. We'll
He's
be diving
definitely
more
using
into
it.
the charts as well as some example trades. Stick around.
I have heard they're like cracking down or whatever though. I've not had any issues, but I think I have. I don't really watch YouTube on my computer, just my phone. And it's good on there. I just have to keep I have to update and sometimes I have to reinstall Advanced, which is an amazing app. Aw, erase that. I got dailies because I didn't want Monday, so. Thanks. Come, let's all take profits on all our calls from all the week. Come, join me. Guy's so tilty. Hey, you're up on your calls too? Hey, why don't we close them and go have a beer? It's Friday. Let's sell our calls and celebrate. Wee. Everybody's doing it. Unbanning people. YouTube just going through their ban list. Unban, unban, unban. Excellent. Still pretty early though. Still pretty early. Could give us one more shakeout. See if we catch some resistance up here. Be a nice sign. Might even make it a little head and shoulder up here. Would like to see that actually. I would really like to see that. I even got an engulfing on the 5-minute. Like that. Yes, let's all take profits. It is Friday afternoon after all. I don't think your ad blocker would affect your account at all from like being active again. That'd be interesting. I was never banned. I was suspended on one of my accounts for quite a while, and I think that was it though. Never perma-banned. They don't know why people were banned. It's very simple. Snowflakes complained. They banned. And then they just refer to their massive terms and conditions, which gives them basically carte blanche on anything they want to do. That's it. Is in here. We got a straight. Better have a straight. Oh, I got 2 pair in the end. Nice. Got a 7. Doing. Great table. Oh, I got this guy tilty too. Oh, this one that was tilted, I think, left maybe. Alright, SPY's come down a little more. Still up 1%. Made kind of a double top there. I have this RSI divergence that making me consider the reversal. Engulfing candle in the 5-minute. Also this tapering. Potential for tapering. So, doesn't mean it's going to just come all the way down to VWAP right away. It could still be bulls building liquidity. That's why we take profits and have stop losses. I'm going to start taking first profits we get here, this channel, which could be a spot actually to enter as well if we break it. If I had more buying power, I probably would. Suppose I could use my backup account, but I'd rather not. You just see this selling at some point. I'd like it to get more aggressive, not just stay in this channel. Otherwise, this could just be bull flag. What a quaint world we lived in back then. Those were the days. It is weird how, like, this is so strange. How our identity, like, we just didn't care at all. I don't know. Like, let's just put all our information. I mean, I guess the internet was a safer place then, somewhat. But still, it's just funny. I was a pretty early adopter of going somewhat anonymous. Really just stopping using social media in general. And then it was like, yeah. And that was it. And now I'm on YouTube. You fired up. That's true. Yeah, it was less. Yeah, it was safer. Could trust people more. We weren't a communist country. I mean, tell if these guys are just super tilted still, or yep, yeah, Jack. Alright, let's close a couple. I said bottom of this channel. This is what we want to see though. We want to see a break. This is great. Break to the downside. More aggressive selling coming in, which is excellent. Sell a couple there. These are dailies, so I gotta be pretty quick on the trigger. Get a reversal that it's premium gets sucked. Hold a couple more. We wait. If we get a bounce up. Back up in there. I had me shook this week.
And so as far as big picture, what are you watching
Jeez,
here?
man.
This name also has
I
earnings
think
next
today to
Wednesday,
be
but before
huge
the
to
market
make up for
Well, even
anything,
that, I
but
mean, that feeds
I'm not going
right
for a
into this
makeup
kind
day.
of tides are starting to turn narrative because
Nope.
remember we were talking about Disney, and the one thing that
Base
I
hits.
was a little disappointed about was the fact that, well, we were holding below the 200-day
Just
moving
can't
average.
have
That's still the case in terms of Warner Brothers.
my
But the other thing I
strikeouts
pointed to
also
with Disney is,
send me to the
remember
hospital.
The RSI was limited in terms of participation.
Just a simple
unable to take out
strikeout
those
and go sit
October
back on the
highs
bench.
as of yet. Look at what's
Oh,
going
like
on here. You can see
getting in a
lot
fight
more
with the pitcher and
enthusiasm in terms of that relative
breaking an
strength
arm.
indicator. So let's keep an eye on this next week into the middle and end of November in terms of will we get some enthusiasm associated with this bounce? Will we be able to work our way back above the 200-day moving average, play catch up to that broader market here? But definitely in this instance, looks like there's a little bit more legs, a little bit more ability to retrace some of that significant structure that was established on the way down in this rally that we've seen this week.
Yeah, hoping to reclaim some of its former glory of this year when shares were up like 70% to kick off 2023. Doesn't seem like we'll get back there, but at least we're itching closer. But really great breakdown as always, Ben Lichtenstein, host of Futures. So now trading this name, Alex. Walk us through what you're thinking. I mean, it seems like technically speaking, things are relatively positive. So walk us through your example trade.
What we know about this name is it can move in a hurry, and it has kind of trending, I guess, characteristics. It tends to move
Obviously a flush.
quite a big
Wait, where's
distance in a short
VWAP?
amount of time.
What the heck?
Who knows if
VWAP
it'll
on here?
hold it, but it seems to be the case historically.
Does that
as it moves
sometimes.
quickly. It was the strongest performing name in the month of January, as you recall. Not anymore. But all right, we're looking at a bullish strategy going out to November 10th, so this next week as well.
I was idle. Let me back in that table. That was a great table.
So this is a little bit more directional than what we looked at.
43 million.
Really trying to build on that trend movement that we've started to see.
The different
75-cent debit would make a $1.50 wide spread. Half the width of that is 75 cents. So risk 75 to make 75. 11.75 is the break even.
Are you raising them?
Right in line with the current share price of just over
raising them to harvest?
Check on kind of our two loose guidelines for
or is it like a wild one?
Of course, we know that there's earnings
like,
that could potentially be a catalyst for the movement here.
And the neighborhood goose you went after.
In the event that it moves higher, this thing can be profitable, and of course, it's risk defined in the event that it doesn't.
Right. I think that's also something that's
it tastes pretty good.
I feel like what we've seen this earnings season from every sector across the board is that things are moving outside of what the market is pricing in. I mean, we're seeing big moves.
That's hard to do, man.
Of earnings reaction.
Especially if you're like in a domestic area.
Results when they report next week, of
Presidential.
Course. Now,
have little pets that you butcher.
Look at all things DraftKings, another name making a nice move in reaction to its quarterly update. Shares are up, 16.8%, just a modest move to the upside. We'll discuss more of those results coming up next.
That's true. They're kind of noisy, aren't they? How long did you have to raise them? I gotta sell a couple more there. It's like with 0 days this late in the day, it's down to the second. Like the value. It's crazy. I should have, I could have done Mondays. It's fine. Just hard to hold these. Yeah, they're loud. Aren't they kind of violent too? They like peck at you. 6 months from a chick. Okay, alcohol. It tastes pretty good though. We did chickens at one point, rabbits at one point. Didn't harvest either actually. I mean the chickens are more for eggs, but the rabbits weren't. We ended up just selling them, or they would die. Their mom would eat all of them as babies. Your daughter. Yeah, I would totally be chasing those things around. They're scary. Wild geese are frightening. Just in this little consolidation, the position swings like crazy amount. Just with this little bear flag. Yeah, rabbits. If you have like a litter, I don't know what they're called. You just have to make sure the mom's taking care of them. Because moms will eat their young. Not be good moms. It's like the best fertilizer ever too, their droppings. Gotta let it compost for a while. It's super high nitrogen. Wild geese, yeah. I don't know what geese I mess with. There's that ugly bounce. Holy smokes. Probably still fine. Shoulder over here. Let's see where we yeah. Yeah, I was eating all the babies. Yeah, imagine a rabbit, like a big rabbit doing that. It's even more crazy. You just come back in the morning, all the heads are off these rabbits. Like, what the heck happened? Mom's got blood all over. This bull flagging now. Fubo? Yeah, Fubo probably would be squeezing right now. Check the top of this resistance. My count was green right here. Just on the day. Fubo's just been a long consolidation. Or not. Oh, they do the whole thing, yeah. Yeah, we had a bad mom. That's the one we bought. Well, there's a reason they sold that one to us. If you have any kind of garden, though, the rabbits are, I mean, like chickens too. Chickens droppings are great. Rabbits are even better, I think, though. And they're much, they're like less messy, I guess. Chickens are like dog poop. BlackRock's purchasing Fubo and DraftKings? Really? Could have closed all of it there and then wait for a reload.
Know that either. So all I can say is today, massive earnings release from DraftKings and the street rewarding it.
No kidding. And I mean, just over the last 2 sessions, up 5 of the last 6 trading sessions. But what's amazing to me is when you zoom out, not to be pessimistic here because it's a really nice day and a really nice result from DraftKings, but we're still down, I mean, pretty substantially, 53% from their all-time high, which was around $72 a share made back on March of 2021. So that's kind of amazing to me that this stock has rallied 190% this year, and we're still down off all-time highs that much.
I think it's important to note, though, this came public through SPAC merger, and we know when the SPAC mergers come public, 10 is sort of your baseline. Things gone, 300% higher from where it basically started as a publicly traded company if you use that $10 mark, as we know from SPAC. So it's one of the success stories in the SPAC merger space that's been clouded by some disappointment. But yeah, you can't discount the fact this thing got up to almost 75 a share. It's half that now. But it also got down to $9.77 at its low point of last year, and it's made a really impressive recovery off that. Huge year so far, up almost 200%. There's a lot to be excited about, I think, right now if you're a DraftKings investor.
And I haven't heard the word SPAC in quite some time. I feel like DraftKings to me is like the quintessential SPAC, because back when we had all these companies that were publicly debuting via SPAC, it was like all we could talk about. That trend has completely fallen off. Bring back the SPACs, but as far as
IPO, I think is a little cleaner.
Yeah, I do too, given some of the volatility. I mean, even that DraftKings saw, clearly we just outlined it, but it's up 17% today. FOMO feeling is clearly to the upside here, and strong guidance, strong growth metrics going forward. Street likes this name. Street still sees about 15% upside if you take the average analyst price target. It's still, I mean, really nice price targets. We have 24 buys, 9 holds, not a single bear in this name. So as far as trading DraftKings today, walk us through what you're thinking.
Yeah, so it's bullish, but I would almost call it neutral at this point as DraftKings continues to surge. I looked at a 35 call calendar in December and January. So because it goes all the way out to January, only $1 higher really isn't that much considering the move that DraftKings making today. But if you looked at the chart in DraftKings, you would notice that it really hasn't been able to break through this level. It tested it a quarter ago.
Yeah, rabbits. Yeah,
really
we had him in
go
a
beyond it.
hutch
So
or whatever.
I really keyed in to that point, which is this 35 level seems to be significant. Maybe the stock inches its way towards that over the next few months, hangs out in that vicinity, and this thing can potentially benefit if volatility starts to expand.
If you're not going to
as
harvest the
well.
rabbits,
So,
I mean, there's no
the
reason for them.
neutral-ish version of
Unless you just
the
want them as a
call
pet, I
calendar,
guess.
But of course, for someone
Or to
who's
sell,
more,
but
potentially optimistic, or maybe wants to fade this move if they're more
I
bearish.
don't think they're really
we know
worth
the calendar
the
spread is
hassle
super
for
customizable.
anything other than
Time
probably
frame can be
harvesting.
changed as well.
Unless you have a big market to
Traditional
sell 'em.
month-over-month calendar, and then relatively neutral.
I mean, you
just
could
being
like
just
skin them and do
slightly
rabbit
above the current share
fur.
price at 35. Would
Also,
still call
I
it
guess.
bullish though, because we aren't at 35 yet. $75 in risk on the 75.
Let's see.
cent
Got a
down.
little inverse
I think
head and
it's
shoulders
fairly
here. We are in this
straightforward,
downward channel.
Jenny, but really just
Don't want to
looking
break
for sort of
here.
a slow grinding
Probably
of a
should cut my
move
losses.
and really just
I do. We
maintain
do break.
today. That's the big question I think DraftKings investors will have is we've had these big up moves, but they're not always held on to. Sometimes they're kind of flash in the pan.
Yeah, and that was a few earnings back. We saw a really nice reaction when their
Any more
CEO
people
said they're not seeing
wanna
any
take profits
impact
from this
the
very
overall
lucrative
economy, but
week
it seems
we've
like
had?
it's held true actually for this earnings period because it doesn't seem like anyone's cutting back on their gambling fund, at least not as far as DraftKings results went. But we will leave it there. For
VWAP's
FOMO.
pretty high.
Coming up next, we will talk objectively one of the biggest stories of the day, if not the biggest. That is all things
20 to
Apple.
2.
We were hoping we could see them turn into positive
I think this is a
territory.
good sign, though,
I
that
think
we
we're
will
a little bit off
probably
there.
at
We're
least
down
return to
about
VWAP
1%,
today.
or about $2
At some
here.
point.
We'll discuss some of those numbers more with Jeff Pierce coming up next.
Unlike the other days where time would just keep going up by and we just kind of keep melting, and like we've had some reversal, signs of reversal. I just have to sit on my hands a bit. Those were good. Those were good closes, though. Closed like I closed 6 in there. 6 of them. Coffee. Coffee. I'm ready to stare at the chart and not go anywhere. I'll sell more at VWAP. Then probably at the bottom of this channel I'd sell more. And then low of day, sell more right here. And I mean, that'd be crazy. Big reversal Friday if we go low of the day.
CFO called out the tough comparisons from a year earlier when they saw a lot of pent-up demand for those products. We look at wearables, home, and accessories. That revenue came in at $9.3 billion, down from the $9.7 we saw last year, also below the $9.5 billion that analysts were expecting. On the services side, and this is one that we talk about every single time they report, that revenue was strong. It grew at $22.3 billion, up from $19.2 last year, above the $21.4 billion that analysts were expecting. They set records, according to the CFO, across many of their big service business categories, including ads, cloud, video, Apple Care, payments, and music. They also saw gross margins at just over 45%, which was above the guidance. If we look at the outlook side, no official numbers were reported, but they did say they expect Q1 gross margins between 45 and 46%. They also said for the December quarter, they expected to be more similar to the revenue number we saw last year, which was around $117 billion. Analysts were looking for closer to $123 billion, so that's certainly a disappointment. However, they do see iPhone revenue growing on a year-over-year basis, while iPad and wearables could decelerate significantly from the September quarter, according to the CFO.
You know, Jeff, when I start thinking about Apple, I have to, wonder 4 straight quarters of revenue declines year over year, first time since 2001. We can talk about all the positives and the records, but the reality is it possible that Apple's just not a growth stock anymore? That this is a dividend-paying stock, that this is a value stock? There's nothing wrong with that, but maybe its best years of growth are just in the rearview mirror.
Yeah, that's the big question mark, and we're hearing more and more analysts talk about that, but we've kind of heard that story before, right? And, that discussion's come up around Apple, and then we start to see some big growth out of them. And, the question is, I think that's a good one, but also what do these other categories, what sort of role do they play in the new Apple? I think the service revenue side is a big one. It's becoming more and more important. It doesn't make up near as much revenue as the iPhone, which is close to 50%, but if you look at the margins, very high profit margins, closer to 70% for service revenues, as opposed to the products, which profits are closer to 30%. For Apple, services represented almost 40% of their total gross profit for the quarter. You look at what that could do when you've got renewal cycle that's down for the iPhone, or if the PC market isn't doing well and that's putting pressure on MacBook Pros and iMacs, that's certainly an area that could help progress some of that growth for Apple.
Yeah, I completely agree, because I feel like services is genius because it's consistent, it's reliable revenue. I mean, I pay $15 a month. I think it's to Apple Care Plus at this point, but I don't even know what it's for, but I just pay it, and that's reliable. And I'm sure I'm not the only one that's paying some various monthly fee to Apple. They're not even sure what it is. So that ends up working out, it seems like. But all things considered, still a really strong report, even though it seems like the market is very hard on Apple as far as some of their growth prospects look. But we'll leave it there. Appreciate the breakdown, Jeff Pierce, contributor here for the network. Now coming up next, it's time for Under 30. We are talking all things NEO, making a nice move to the upside despite some negative news of layoffs. 10% of their workforce they announced, but stock needed some upside here as it's been weaker really over the last several months. We'll discuss more with George Tillis coming up next.
I'm on a boat. Here, Jay. Good afternoon.
Network. So George, walk us through what is driving shares to the upside today.
Come on, someone's got to play the poker. I don't have a bot doing
their
that for me
cost
yet.
pressures because NEO is still in this growth phase. They need to mitigate some of their expenses.
They do, and I see the stock is higher today. I think moving in sympathy with the market, but they are addressing some of their financial concerns, including cost mitigation efforts, which includes, unfortunately, for those who are working for the company, they're about to lay off about 10% of their workforce. But costs are really a problem for NEO. I mean, overall, the company's more of a luxury EV automaker. They also produce SUVs. Their sales growth in terms of total units is increasing. Their top line sales over the past year was higher by 30%. If you just look at the report also, in terms of their October deliveries, they were
stop
higher
out on
by
these.
60% or close to that
Dang,
year over
dude.
year. Sequentially, month over month, their sales growth has increased about 3%. So that's also a good
Bull
thing.
flag.
And their total unit volumes, if you look at October for the full year, was up about 36% to 126,000. But if you look at the stock, it really hasn't performed
Closed
well
all of it
at
and
all.
just used my
really has
backup
to do with
account.
the fact that the company's costs are really out of line. So I think this is a story or a case of, well, just because you're selling more product doesn't necessarily mean you're selling more at lower costs. Because if you look at NEO's gross margins, they're terribly low. They're actually around 5.5% of sales. So that tells me that you've got high cost of goods sold, which probably includes high SG&A expenses, selling general administrative expenses, and they're starting to address those. And I think that's why the stock is moving higher. But, it's again in a challenging environment because sales are coming through. We know that some of the sales in domestic automakers, the big three, Tesla's facing some challenges now. We've got NEO also potentially facing some challenges, but it's still a growth company, but it's just growing at such high expenses on a per unit basis that it just can't give some visibility on profits.
Yeah, George, the story's getting worse when it comes to gross margins for NEO. I think that's the concerning piece. Typically the scale helps the problem, it doesn't make it worse. But
exactly.
You could even argue that the growth isn't all that impressive at this point either. I mean, a name like Lee is growing at a far more impressive percentage.
Oh, jeez. Well, those guys have a
and
jack,
it's
probably.
delivering more vehicles. Look, I know there's price point discrepancies and stuff, but just comparing to peers that are in similar phases, it's lagging. Compared to Tesla, it's not even in the same league anymore.
Are you kidding me?
If it ever was.
Bluffing? I haven't been playing with these guys. I don't know how they play.
Some would say maybe at some point in time it was, but obviously Tesla has proven itself remarkable in terms of its growth, but at the same time profitability.
These guys are already all in.
That's where the disparities lie. It also has to do obviously with access to markets and total units sold. I mean, Tesla's on pace to sell, I think, 1.8 million vehicles this year. Whereas if you look at NEO, its cumulative sales are barely over 400,000. Now, cumulative, that's going, from day one in terms of total sales. So they're still very small on a relative basis. But, I think, when you look at the automakers, especially the EV ones in China, we talked about Li Auto as the one that actually has shown not only growth, but also the ability to essentially control costs and actually do so where they actually have some margin. And I think that's extremely important in this market environment. Even if interest rates start to fall down, we're probably going to still see this divergence or dispersion between the profitable ones or ones that are close to profitability versus not. And NEO, unfortunately, it's still losing quite a bit of money because if you look at their sales last year, it was around $6.7 billion, but they lost $2.8 billion to achieve those sales. So they've really got some problems to address costs. But again, at the same time, if prices are falling, they're going to have to increase sales, but those sales are going to be costly.
It's almost
so
two.
I think we're at an inflection point here on this one.
Okay.
Because of the fact that they're just so far away from profitability.
Yeah, and I think that's such a good point.
Red
I think
candle
also
to do
why
it,
you
though.
can't necessarily compare them to a Tesla. I think Li Auto is closer, but Li Auto has been putting up some staggering growth numbers. So no wonder we're seeing shares perform a little bit better on the year, but we will leave it there. Great breakdown, George Tillis, Senior Markets Correspondent for the network. That also does it for Alex and myself for Next Gen Investing for this week. Have a wonderful weekend all. Coming up next, we have the Watch List.
I just got quads. Oh my. 350,000. Whoops. Which went all in before that ace. Forgot I have a small stack in this table. Why? That was a nice trade. I just coming into this negative, so I was greedy on the profits. Huh. Look at that bounce. No red candles for 1, 2, 3, 4, 5, 6. Oh, look at that. Look at that. Retesting high of the day. Oh.
Ladies, it's 2 p.m. here in New York. I'm live from the floor of the New York Stock Exchange, and here's what we have coming up on today's show. We're taking a close look at Brown-Forman, including how weight loss drugs could help the maker of Jack Daniels. Informatica's CFO joins us to check the company's strong earnings and outlook, its new generative AI tool, and a just-announced restructuring plan. And our panel puts the labor market in focus after a cooler-than-expected jobs report. Before we get to all of that, let's take a quick look at the markets. With only 2 hours left in the trading day, we are seeing really substantial gains, especially for the Russell, up 2.7%. The NASDAQ, the next biggest winner, up about 1.3%. S&P not far behind it, up about 1.1%. The Dow up 283 points, or 0.8%. But it's the weekly gains that are the most impressive. Best week of the year so far. Dow Jones up more than 5%. NASDAQ
Best week of the year.
The Russell up almost
That makes
8%
sense.
on the week. Let's take a quick look at some of the futures.
Oh, I
products.
have an
We've seen
alert
dollar
for the
turn
Theta
higher,
Farm
albeit modestly. Gold is
members on
also higher
YouTube.
today, but crude oil is
Build.
falling, down 2.5%, back below $81 a barrel, and Bitcoin back below 35,000, down about 1.7% right now. For some of the biggest stories in the markets, let's welcome in Kevin Hanks, Senior Equities Contributor on Schwab Network. Hey there, Kevin. Thanks so much for kicking off the show with
channel.
us. I know you have a few
How do I close?
earnings movers that you're watching today. Let's talk about the winner. That's Square. Before we get to the loser, which of course is Fortinet. Square, formerly known as Block, shares up 12% today, doing a
Square,
good
formerly
job
known as
of holding
Block?
on to those gains. Tell
Come on,
us what has
Caroline.
investors so upbeat
Being
after this
nervous.
report.
Yeah, hello, Caroline. Jack Dorsey's other company. Remember at one time when he owned Twitter? Now it's his only company, and he's taken a page out of Mark Zuckerberg's book. He didn't exactly use the year of efficiency, but he did say they're looking for more. He unveiled targets that look for more efficient growth. He's using growth, headcount, profitability, all those things to boost the stock. The stock currently up 12.3%. This stock had been pretty much left for dead for a while, as you know, Caroline. But the payment stocks, he may be buoyed by a little bit of PayPal's earnings earlier in the week. The last 2 years, both these stocks down 75%. So what they did, they made a commitment. Some part of the story is to the rule of 40, and that is revenue growth rate and profit margins together exceeding 40%. They think, and some of the analysts think, if they achieve these or get close to these, that could basically underpin a multiple re-rating on Square. And remember, this is a payment space. Started out as a commerce hardware company, then got heavily into crypto and payment, but now it's trying to recovery. Like I said, taking a page out of Mark Zuckerberg's book, being more efficient, working on headcount, keeping it from 13,000 down to 12,000, overall controlling the other parts of the company. And as you know, in the last 12 months, when you talk about efficiency, when you talk about the expense side of the business, investors like that, Caroline. Stock currently up 12.2%.
Yeah, and up 23% this week. Still negative on the year, but a good week nonetheless. Yes. And then switching to the biggest laggard on the S&P today, that's Fortinet. I'm just taking a look. Shares down about 14%. So off earlier lows, was down almost 20% earlier this morning when I was chatting about this one with Oliver, but still down double digits after disappointing, or I guess mixed results, right? And a disappointing outlook. Fill us in on what really spooked the market about this one.
Caroline, this one's more typical of what we're seeing in the last few earnings quarters, which is earnings per share is doing fine. 41 cents versus 36 cents expected. EPS for the year expected, or for the fourth quarter, to be 42 to 44.
Maybe that earnings
expected
or something.
42 cents, so that's better than expected. So what's keeping this deck down? Revenue. Both the revenues coming in light, 1.33 billion, missed the expectation of 1.35 billion, and the looks in the fourth quarter and the full year below expectations. So better earnings per share, lower revenue is what's weighing on Fortinet, Caroline. Remember, using efficiencies, raising costs, cutting overall costs, raising prices. That helps the stock lately. It can't go on forever, though, Caroline. And those shortfallings in revenue hurting the stock of Fortinet. Remember, this is a cybersecurity company. These stocks should be maintaining their popularity in this market. This one, not so much in terms of their guidance in revenue.
Yeah, cutting their billings and revenue guidance, in turn getting a couple downgrades. Although, if you take a look, Fortinet shares still actually no, they're in the red for the, or up about 1% for the year now. So it really has erased all of those year-to-date gains. Also, just want to take talk about the bigger picture with you for just a second, Kev, because I know you talk about the importance of sentiment heading into the weekend and how that could potentially influence next week's trading. So, I mean, I don't think you can have more outside of Fortinet. Apple's also a loser today, but outside of a few companies and the energy sector, sentiment is pretty good. So, is this setting the stage for a continuation of the rally next week? What do you think?
Don't have that good of a hand.
Caroline, this has been a great week for stocks, as you know, but the last several Fridays, we've ended the day quite jumpy. Why? Geopolitical risks over a weekend, right, have made the markets very nervous going into the weekend. Now, next week, we're very light on economic data, but still heavy on earnings.
Oh my gosh.
Only one Dow stock coming out with earnings next week. That's Disney, but 670.
I got so lucky. I wanted to be a
of the
two-pair.
Russell 2000 is coming out with earnings.
I got so lucky.
So that'll give us plenty to talk about. Over 1,300
Yeah, you should
names
probably quit
total,
after that one.
Caroline, coming out with earnings
There we go,
next week.
SPY.
So
I didn't
even
close my
though it's
puts.
very light on economic data, we still have geopolitical risks. Let's see how the day
Maybe
finishes up
foolish.
here. And another massive week for earnings next week, Caroline.
I wish I closed
All right,
all of
Kevin
them
Haynes,
here, actually.
Thanks so much. Always appreciate your insights. All right, let's take a look at the bigger
they just
picture and continue talking
retest
markets
that
with
top.
Ed Siddell, CEO and Chief Investment Advisor at EGSI
think data is
Financial.
easier,
Ed,
just-
thanks so much for joining the show. Great to see you.
Yeah, thanks for having me.
Pretty crazy.
All right, what do you think the biggest driver of the rally that we've seen this week has been? I mean, this is what, the best week of 2023 so far?
By far. You know, and I think it started with Powell in his speech on Wednesday, kind of alluding to that they were going to hold fast and
Back in that channel and see if we can break
not
this
raise
low.
rates. And then it kind of went forward to the jobs numbers that came out today. You know, that bad news is good news, at least for the markets. And then we saw bond yields fall, a little over 0.5% today so far. And, the markets really like that because they're anticipating, a soft landing. So I'm not sure if that's accurate or not, but at least that's how the markets are reading it.
Is cheering a softening labor market, is it actually a good thing? I mean, we know it's what the Fed wants to slow inflation. We know this market kind of likes bad news is good news, but should we be cheering a softening labor market?
Well, you know what? Actually, let's go back and look at what happened, 8 out of the last 9 months, because 8 out of the last 9 months, they've revised those jobs numbers downwards. And I wouldn't be surprised if they do it again
Chop
for
around
this
up
month
here.
as well. So the economy is not thriving and as strong as everyone purports it to be, in my opinion. And really, the reason is that the growth of the economy, if you look at over the last 12 months, we've hit 1.3 trillion plus in credit card debt, with a 50% increase in credit card debt just over the last 12 months, while
I'm
savings
scared.
at the same time is coming down. So
That was a pretty low flush.
the growth of the economy is being built on more debt.
I don't think
that
GME's gonna
does
explode,
not
no.
allude to a strong economy, and I don't think we should be cheering a slow economy
I
right
already
now.
pushed my luck on that other
because
all-in that I should not
inflation
have
is
won.
still strong. I think it's going to be around for a long time, and the Feds have really been letting the markets determine interest rates, and that's why they're still hovering around 8%.
Do you think we've seen the peak in bond yields?
Honestly, I don't. Maybe for this year, but I think it's going to be short-lived going into next year. I mean, we're facing a debt
Bouncing off
crisis.
that 20 moving average,
just,
huh?
not just consumer debt. We've got defaults on car loans at highs, increased bankruptcies both on the consumer level as well as business level. And the amount of spending, we're continuing to spend and spend and spend, not to mention the national debt. So we're approaching, $34 trillion.
Nice river.
So until we get spending under control, and I think inflation is still going to be here,
They won't try to
and
catch
I
my
would
bluff.
not be surprised if, towards
bluff.
the end of the first
A
quarter, we
bluff.
see bond yields go up again.
So I guess it's no surprise that when I'm taking a look at
Well, I guess
the
we had full
notes,
houses. I
you're
wasn't even paying
pretty
attention.
cautious when it comes to your portfolio positioning, talking about gold and commodities and short-term investments that yield 5%. What do you need to see to be more bullish or less cautious or defensive, if you will?
Just be patient. We've got an awful lot of earnings coming out next week, depending on what the Feds do in their meeting in December. But still, there's opportunities out there, and anytime you have a market
The banks
like
are
this
sound and
that's,
resilient.
very volatile, a lot of ups and downs.
Thanks for
a lot
checking,
of
Bubba.
mixed messaging when it comes to economic news and jobs numbers. it does provide opportunities. So finding those companies, those value companies that are involved in commodities, like Exxon, that provide good dividends, have strong balance sheets, a lot of cash on hand. Those are the opportunities right now. But I think being patient over the next couple of weeks through the end of the year is going to be really important, because if you have enough cash on hand, you're going to be able to take advantage of some really good deals going forward.
The choppy
So
mess
between now
for this
and
late in the
year-end, do
day.
you think this market moves higher or lower
That's
from
straight.
here?
Again, I think it's going to depend on next week. We've got an awful lot of earnings coming out next week. Depending again on the Feds and
Caught up in this
what
chop.
they actually anticipate, because
2
during
o'clock, still plenty of
Powell's
time.
speech on Wednesday, he basically said, throw away the script. We're really not looking at the dot plot. Each meeting we're going to determine if rates are going to stay the same, if we're going to raise them or
Banks
lower
are
them,
sounding
because
resilient.
typically, it's 4 meetings after
Jay.
they stop raising rates that they start to lower. But he basically said, let's just go ahead and throw that script away. We're just going to have to play it by ear. So, just taking it one step at a time. And I think December is going to determine if we really do have.
I need to get out of these contracts if I can.
All right, we'll have to wait and see. Not too
There's a
far
great
away.
setup.
Citadel, EGSI
Use my
Financial.
backup
Thank you
account
so
by end of
much.
day, but
Absolutely.
I'm not expecting there to be.
Coming up next, some names moving the market and why one guest like Jack Daniels maker Brown-Forman, especially with the rise in weight loss drugs like Ozempic. Stay with us on Schwab Network. We'll break that all down.
Probably gonna have to see a break of this low to get back to where I was, though. All this time decay. Of course, the straight comes out there. Can I bluff him off? Maybe. He might have it. Probably does. Oh, he didn't have it. Yeah, you did. Shouldn't have called that. On choice, steak burrito with queso. Queso and creamy jalapeno salsa and a gallon of sweet tea. $50 million to start a bank. That is neat. Might be repeating the same bull flag from this morning. Dang, that would be a bullish end of the day. Very bullish. Be like a rip into close again. Wish there was a way I could copy this one. I don't think I can. That macaron. Macaron. It's a whole new calls. Take any profits on this? None? Six live stream. It's a wacky Friday. Followed a little bit. I guess, I mean, I listen to PP shows sometimes. I don't know what's with the bonds. I don't know if there's any update on that, but I think you should know if your shares have any value this month. Oh, but every day's lotto for you. What gets games? Oh shoot, David's king. Whoops, I folded. Just wedging here. Not quite like that, but 215. Calls, want to take profits? I think shareholders could still actually get equity in another company. I think that's still a possibility. Of course, the fact that your brokerage deleted your shares and you don't see them in there anymore can be frightening, but then just more signs that it's probably not going to happen. But I don't think necessarily that it's impossible that it could still happen. But I also don't know at the same time what would be the determining factor that would say, okay, it's not happening. There are deadlines this month, I think, and maybe we'll get some. I just want all the tinfoilers and conspiracy theorists to admit it, then I'll accept it. Yeah, I mean, none of the stuff with like Ryan Cohen or Icon, like none of that. Like, sure, maybe that's true. Maybe there were this big secret plan behind the scenes and they're dropping Easter eggs everywhere. I'm not holding any weight to that. But yeah, the wording on the dockets, and the more like fundamental type stuff, can't think of much off the top of my head, but that's the only thing that has me convinced that there's still a possibility, even though shares are quickly gone. We're about to get a big Rip, aren't we? I should probably stop trading for a while. Position sizing too. I thought it'd be better to just do bigger and trade less. Past couple days has not been good. Bigger trades and bigger failures. Just less often.
We'll call it the S&P 7, right? We got Google, Microsoft, Apple, Amazon, Nvidia, Meta, Tesla. Basically, they all have reported, I believe, except Nvidia. And you know, is there really a chink in the armor, or have these stocks been
What are we admitting?
you know, priced for perfection? And most of them came through
I suck
earnings
at
seasons
trading.
pretty good, except you know, Google fell off. They had like weak cloud growth, but everything else was good. I think the one company I'm really concerned about is Apple. They reported yesterday. They're a big, massive company, 7.5% of the S&P 500.
Well, yeah.
This is now their
Yeah, I mean, I
fourth,
think the pictures, the
consecutive
tweet's real of
quarter
RC and
declining
Icon.
sales
Like,
growth. So maybe they've peaked.
I'm not saying
Maybe
that that's
they're
not
the
real,
next
but
IBM.
yeah, I
They're
agree.
just a sleepy
There
giant
might be
tech
nothing to it.
company that pays a dividend, and you know it's not going to explode on the upside, but it's not
waiting
going
for an
to fall
S1.
off a cliff on the downside.
But what's the
at end of
deadline
day,
for an
I
S1 to
think
come out?
for Apple, they
So then you
need to
know that
innovate and be
you actually don't have
revolutionary
any
again.
value.
I mean,
That's
they
the
have to
question.
maybe
Is a
come
nice
out with
flop.
another life-changing technology. That's what people expect from Apple, and they haven't done it in many, many years.
All right, I don't know. Apple's up 35% year to date. IBM's only up about 5%.
Totally
We
agree,
were talking about
Kitty.
that one earlier in the day.
Most
But we
likely
have to leave
scenario.
it there. Tony Zabigala, Strategic Wealth Partners, thanks so much for your picks and your
About the
insights.
secret millionaire
Have a great
meetup.
weekend.
I didn't hear about any secret millionaire meetup.
Next on the watch list, we're looking at
That the,
Gen
I mean, the one
AI
that
and the
Poldy's
role
doing,
of OpenAI,
called Secret Millionaire.
Anthropic and tech investment strategies. Stay with us.
Oh
We'll be back
shoot! I
after
didn't mean to
this
bet
quick break.
50. Whoops. Oh, I hope someone has a. Oh, I don't want to have a full house. Something. Hope they don't have a full house. Not a full house. Oh. Didn't call. Dang. I played more aggressive there. Thought he would have called. I figured he had a flush also. Really hold over from the old GME temporal days. Is a some Pulte tweeted? I didn't see it. I'd like to see it though. Send me a link if you have it. I've never thought Pulte had anything to do with it. I mean, I've taken what he said at face value, which has been he's not a shareholder and that's it. He's not involved, and he doesn't know if RC is. Those days have we put up a poll about realized gains. What was your win, Kitty? I want to hear about it. Dude, I'm getting some awesome hands. Gotta try and play a little different to get these guys. Yeah, see, they're not calling. So unfortunately I have to play more aggressive. Maybe I'll check this one down. I don't know. I don't know. He's calling. I don't want to go too crazy. I don't want to go all in. Folded. I don't think I could have played that any better. You actually made money on barbecue? Congratulations, Fancy. Awesome. Were you shorting it? I just burning the midday theta. Pay attention here. I don't. Hold on. What is this? Just getting built here. Midday chop. End up anywhere. Definitely had signs of reversal. We got it, but then now we don't know if it was bulls building liquidity or if it's actually bears now building liquidity. We're gonna keep coming down. Or it's neither and they're just undecided. We're just getting that chop. Over 1% green. UOP's still below us. It is Friday. Hey Julian, doing good. Went all in, 1 under 10. Nice. I mean, all in was a bad idea, but that's awesome. And then you sold at 30 cents? Well done. So you actually did make money once it was on OTC. That's hilarious. Well, you did well. Overstock. A nice little rally today. Late day rally. It's kind of interesting. $230. We will So, were you watching it for an exit on barbecue? Can I help you exit that position? Rival just started pumping.
Demonstrate that they're getting in at maybe a discount, and there's some over market performance. And I think actually even though the IPOs that I mentioned haven't performed great in the last month and a half, and some since they went public, they've actually
GME back below that
outperformed
resistance line.
NASDAQ. And we're starting to see now that rates are declining a little bit. Some of those companies that I mentioned are actually starting to perform.
Dude, the
Now,
last 5 days in SPY has been crazy.
underwriters
This was
need
the
to
biggest
maybe
week this
lower the
year.
bar, maybe
They said,
not lower the bar,
like
but,
the biggest
but
gains.
sort of lower the pricing
Like crazy.
expectations. So I do think
All year.
that,
Very end of the year.
underwriters do want to
Yeah, we almost hit the top of the Bollinger Band.
demand for new issuances,
Wow.
and so I think they're going to have to maybe lower the
That is
multiples
crazy.
a little bit so that they leave a little bit of room for people who take the risk on buying an IPO,
I'm gonna
give
start
them a little bit of upside. And so I
the
think
top of the
that's
channel
what will
too.
more likely
And
change.
start
is that
buying
the
puts for.
valuations will be a little
Actually,
bit
are we?
lower until we start to
We
see
almost hit this
sustained,
resistance up
aftermarket
here.
performance in these new issuances.
We might still today, honestly.
Have to leave it there, but really
Don't
appreciate your
wanna think
expertise
that, but
on these subjects. Greg Martin, Rainmaker Securities, thank you so much.
Thank you.
Still ahead on the second half of the show, Informatica's CFO joins us to talk the company's strong earnings, its new Gen AI tool, and it
yeah.
just announced restructuring
Yeah, I was gonna start
plan.
buying
As we head to
February
break, let's
puts
take a
on
look at some
SPY.
of today's winners and losers
That top
in
resistance.
the S&P 500.
Scale in. Top of the Bollinger, scale in. Top of that channel, scale in. Lots of entry points. And then if we break the channel, stop scaling in. We'll probably just wait. And then restart buying in on that gap fill on SPY up near the highs. And right around there for potential for a double top. That's when you get February, make sure there's enough time. In case we have a Santa rally that gives us a huge double top. Update. Hoping a king will raise. Or yes, I'm just gonna call it. Re-raise. Beautiful. Get them all in. Just call. Shoot, I'll have a flush out there. I just gotta check. I wanna raise, but I'm trying to slow play it. There's a flush though. Oh, he had the flash. Nice. I'm so happy for him. Alright, Spy, what are you doing? Breaking up again? Nice fold. Nice fold. Liquidity. Built. Complete. Ready to rip. Hour rip. Oh, that flush. I guess I have to go all in. A little aggressive. Too aggressive. The slow play was working beautifully though. Bye. Man, I'm getting on great hands. Trying to go for that flush again, I bet. Do it. Give me back a little bit. What's up, Jay? Years, really? New high there on Spy? Yeah, dang, there it is. I'm out. I'm done. Fun week. Alright, Jim, I'll check it out. Put that in media next time, or DD. Really just a fake out candle? Dude. Don't even. Folded trips. What a day. Full house.
Software, talk to us about the transition to being cloud driven. Certainly seems like it's going well based on your latest earnings.
Well, Informatica basically invented the category of data management back in the 90s, and for many years was the industry standard with vast advantage in terms of market share and capabilities. The company went private in 2015, and at that point began the next phase of the journey, which was the transition from on-prem license maintenance software to modern stack, cloud-native software for data management to address the needs of the world that was moving to the cloud. That transition has been going on, for the last 8 years, and we're getting into the final innings. In 2021, we announced that we were a cloud-first company, and at the beginning of this year, we announced our strategy as cloud-only, consumption-driven, which has enabled us to simplify our business model, focus our message, dedicate our resources on both the R&D and the go-to-market side on the modern cloud products. And you're seeing it in the growth of our cloud business, which is now over a third of our annual recurring revenue. And it grew last quarter by 37%, which is the third quarter in a row that it's grown at that rate.
All right, so a cloud company with a new Gen AI tool, or AI assistant, Claire GPT. One of my last guests said everyone has an AI story, you included. Tell us how this is being utilized.
Well, there's two parts of the AI story for Informatica, we think. One is AI for Informatica, and that's Claire GPT, it's Claire Copilot. It's the AI that we embed in our products and make available to the data users, the data scientists, the IT professionals that are using our cloud-native platform to manage their holistic data estate in the new data stack. Claire Copilot is available today and is being used. Claire GPT is in private preview, which will allow you to use natural language to use Claire Copilot and the other Claire AI tools that have been in existence for a couple of years to make our product better, make the user of our product more efficient, and allow us to win more in the marketplace. That's part one of the AI story for Informatica. Part two is Informatica for AI. Data is the lifeblood of AI, and if you're an enterprise that's going to stand up and operationalize
So this tweet
AI workload
from Pulte, I mean,
you need three things. You need holistic
that makes you
data,
bullish on barbecue?
high quality data,
Or
and you
that
need
makes you think
data
that
governance.
Ryan Cohen's going to be there?
That's what we do, and we do it with the best of breed point products across those three categories, and we delivered on the industry's only cloud-native platform that can truly address the needs of AI workloads on the modern data stack.
All right, and I noticed you have a lot of big-name clients based on your website, Marathon, KLA, Gilead. We're continuously hearing of companies being conscious about costs at this point. Is that what you're seeing when you're working with your customers, or what specifically are they most concerned about when it comes from a cost perspective?
Customers are conscious of cost these days, no doubt. They have been for the last few years.
Did I ask that?
That being said, what we
That's
do
a pretty valid
is
question.
mission critical for these enterprise customers. The infrastructure software that we provide
just like
manages
maybe
data
preoccupied.
across their enterprise.
I don't know.
In
I
most
think I said that,
cases,
but
for workloads
maybe.
and use cases that they just can't do without. Now,
I'm just talking about this tweet that
they have been cautious
shared.
and thoughtful about their spending decisions for new workloads, and that's been the case for the last 18 months, 2 years. We've seen that environment be pretty stable, frankly, over the last 3 quarters. The caution continues, but it's not getting any worse, and maybe there's reason for optimism going forward that it's going to get a little bit looser in terms of that. But that being said, the cost pressure that is affecting some other software companies that are what I would call direct drive consumption driven isn't really affecting us because all of our contracts are multi-year committed spend that are usage based, and therefore optimize the consumption component of it is a real value driver for our customers' usage of it, but it doesn't affect our revenue or ARR in the short term. So caution, yes, but is it directly affecting us, at least from quarter to quarter volatility? No.
Okay, good insights there. But speaking of restructuring and cost cuts, you actually just announced some new job cuts to save on costs. You also raised your outlook for the full year. Tell us how this sets you up for future success.
The restructuring we announced on Wednesday was the natural next step in our strategic evolution from an on-prem company to a hybrid cloud and on-prem company to a cloud-only consumption-driven company, which is our strategy today. Our focus, our laser focus on our cloud-only business allows us to be more efficient and more streamlined in R&D, in go-to-market, and other parts of our business. That allows us to take more costs out of the business, realize more operating leverage without impacting our growth expectations either this year, the year after that, or the year after that. It was about 10% of our workforce. We're also going to be reducing our real estate footprint in a corresponding way. And we think it's going to take about $70 million of non-GAAP operating expense out of the P&L next year, with only a small amount of savings in fiscal 23.
All right, we have to leave it there. Mike McLaughlin, EVP and CFO of Informatica. Thank
I'm
you
gonna
so
open.
much for shedding light on your
I'm gonna
company
start
and your
opening
results.
up
Really appreciate it.
Thank you.
Have a great
SPX or SPY puts for February.
to discuss the October jobs report and what they're seeing
I've,
in the labor
it
market.
could be early, but
including
I'm
one
just a starter position because we're
industry-defying
basically
Stay with us. We'll be right
basically at these highs, which is what I was waiting for. That was the first trigger. Normally I'd wait for reversal, but I'm getting a lot of time. I'm getting February, so it's a scale in. Definitely seems like this gap is gonna get filled. This has been crazy. I mean, these I might even close in just a few days, like next week. We get like a big pullback, fill these gaps before we move up further. But these are the Bollinger's at again. Okay, I thought about getting out of the money, but keep it. Look at that 8. I keep it safer and we get at the money. My next target, I mean, of course, we start to show resistance up here. We'll add, but top of the Bollinger, and then the channel. The channel will be the highest one. Oh, actually, not anymore. Now it's the Bollinger. But that Bollinger will come down once we have some pullback here. browser. Why are you slow? Look at that though, it's respecting that. I want to get back into some daily puts. Oh shoot, I folded the pocket queens. Oh well. Ace, tens, whatever. Yeah, other Fridays the market's been selling off, right? Just because of what's going on in the Middle East. Have a precaution. Gosh. Yeah, I got back in some puts. Hit the top of that channel. I got some dailies. Bit of an end of the week. YOLO. Psych you up. Just right there. You have it. Yeah, out of 4. How am I down on these puts? Happening. Subrahata. Suprabrahata. call. Nice. What? What? Pocket aces. Congratulations. Beautiful turn of events for you. Pocket aces. Alright, yeah, I've got some 435, so they're kind of out of the money too, even. I'll probably hold this until close to close. See if we get a big sell up into close. It's such a ridiculous notion. When I just say it, it makes me laugh. Did I say big sell off into close? It's like I haven't even been watching the last 6 days. What have I been doing? There's no wick there. Hardly any wick there. Today's Friday. Israel's at war. Ukraine's at war. No one's scared for the weekend. Not this weekend. This oh so beautiful weekend in November. It's a very small position, so not a big deal. The juice is worth the squeeze. The risk to reward here is too good. I could have even gotten some lower, like 434s. I don't think we're going to sell off that much, though, if we sell off at all. It's just a lot of... There's Power Hour. Hat-trick China war this year. Some kind of wars. Well, CNS closed, and we are pinned at the highs. What more would you expect? Perhaps a break of the channel? Or hops? There it is, new high of the day. This has been short squeeze on SPY. A bit. We hit up here on this resistance. Yes, there's my channel. So first target's here, which we're basically at. Second target's top of the channel. Third target would be Bollinger Band. We break the channel, potentially all closing for a loss. I could. Yeah, I could. What's nice about long dated is you have a lot of time to decide. Let's get it straight here, huh? New high of the day there on SPY. Who's talking about it selling off in a close? Who said that? Some people's kids.
With the idea maybe that the bond market was doing some of the work for him. A notion that I fundamentally disagree with, that we're going to talk about here today with some of our guests. But there is also just the fact that actions matter louder than words. And Powell continues to try and talk both sides and say, yeah, we don't like inflation being this high, but he's not hiking. And our employment situation remains okay. It's firm. Our data this week were nothing too big, nothing too shocking in either direction. We continue to see the services economy power our economy. Manufacturing a little sluggish, but employment's firm. Inflation numbers basically hovering where they are. And by the way, crude oil at 81 bucks too. That can filter into the bull case here, because the idea that geopolitics were going to be driving a massive move in crude has fallen flat on its face. WTI at 81 bucks now is down since Israel and Hamas started going at it. Apple shares still lower on the day, but now only 67 bips off from even. Let's bring in Kevin Hinks. Let's keep the convo going here from this morning. I'm wondering if we're going to get Apple positive. It really would be the cherry on top, but I don't know. This is a pretty tasty Sunday already for anyone who was long basically anything except for the dollar and crude.
Yeah,
Full
in terms
house,
of a Friday afternoon,
trips.
Oliver, this rally
Which
is
one do you have?
broad. And it's,
You guys
and
don't
if
fold
you
anything.
look, after say 10 to 10:30
Jack nine.
Chicago time, this market has not given up anything. It's been a slow grind higher the rest of the day.
Where did I say to get calls?
So as long as we don't get jittery
Yeah, right here.
with
What a stupid idea that
geopolitical
was.
risk going into the weekend, as
I'm
long
dumb.
as this market doesn't do that, that's really the last hurdle we have this week, Oliver, is that last 3 weeks, we'll call it, the markets have gotten real nervous going into the weekend.
Sure.
Doesn't look like we're doing
Doesn't
that
look like
as
that
of
today,
right now.
does it?
And like I said, you're right. Except for energy, Apple, and a little bit of healthcare, this market is up. 10
Ooh,
of 11 sectors on the
already?
S&P higher.
See a little circuit breaker halt to the downside.
Realize that energy is soft today with crude oil hitting $81. No one thought $81 with war going on in 2 places was a possibility. That's got to be counter to what a lot of people were thinking, Oliver. But here's the thing. Here's what's
Flush is straight.
a good precursor
I guess they're not
for
straight
next
yet.
week.
Definitely
With
a flush.
the move in the Russell, next week
No,
we
they're
get
just straight.
670. Basically, a third of the Russell is coming out with earnings next week.
Pocket
It's a light
aces.
week for economic data, so we don't have to worry about any tone-changing events really coming from data. So it's all about earnings next week. Disney is the only Dow stock
Still
coming out
down
with
these
earnings
puts.
next week. We have very small numbers. We have 53 in the S&P, 14
They get
in the
out of the monies,
NASDAQ,
so
but two.
this is purposeful.
But
A lotto.
third of
Maybe I'll
the,
close at the bottom of this
the
channel.
Russell 2000 coming
Maybe
out
I'll
with
keep
earnings. So
waiting.
there's that. So getting in, yeah, Apple, how they're going to finish today, this is a flesh wound for Apple. In
Really a
terms of
flesh
its
wound.
move. With these numbers that they put out and the potential here, you know, Apple under 1% down is a rounding error, Oliver. So yeah, you're right. It's a big win. If you were a nervous bull in Apple, you're getting out of here pretty much unscathed.
The other thing, too, is that to your point about the data, the next CPI print is on the 14th, right? So we don't get a big inflation read. I mean, this was the week, it seems like, Kevin. It kind of seems like to me for intermediate or short-term traders that
Still red on that put. That happens
basically
with
the
0
path of
days,
least
last hour.
resistance, probably through next week.
That aren't in the money.
Bullish or bearish? I mean, the price action seems like when you have this type of conviction move with so many news events, the only thing I could think about that might be able to get in the way of it is if suddenly all the Fed speakers that are on the calendar, look at the action here and go, whoa, this is not what we wanted. Why is everybody celebrating? So other than that, is there anything on the calendar that could get in the way of this?
Not on the economic data calendar. That's what traders do, Oliver. That's the difference between an investor, someone investing, and trading. Trader looks on the calendar out to next week. What can get in my way here? What can stop this run in stocks? Remember, we've had 3 months of weakness, right? August, September, October were weak. The fact that we're starting out November bullish means people wanted to see this run. Sometimes the most money it'll cost you is anything you sell against something. And so I think traders are being very patient here, seeing the calendar that there's not much in terms of data, looking at the earnings, starting to thin out in terms of top tier market changing names. And you think you got some room to run here, Oliver. So like I said, last hurdle is any geopolitics risk over the weekend. Besides that, yeah, this market looks good going into next week.
Yeah, but crude oil, I'm over it, man. I'm over the geopolitics stuff. Crude's down since the whole thing began. Hey, some of the moves here, too, in some of these stocks on earnings, Expedia bouncing back big, 19%. Yeah. Even folks willing to extend risk to a company like Carvana again. How do we determine between legitimate, solid economic backdrop, quality stock movements, like maybe an Expedia, people are still traveling, versus like a Carvana, which is suddenly like, all right, so hold on a minute here. How willing are we to extend risk? I feel like we might be getting in that area where it's getting a little bit wild. RK's up, like 20% in 3 days, some almost?
Yeah, like Caroline Woods and I were just talking about Fortinet's down, Square is higher, but Expedia, that's the one that really catches my eye of some of these names because $5.41 versus $5 expected, $4.05 a year ago. That's big numbers. The CEO of Bookings Holdings came out. You saw his quote.
Actually green on that contract.
Travel, you're
Imagine that.
Human nature. Right? Until the money runs out, people are going to keep traveling because there was that gap where they couldn't. So, man,
the money has run out. So the credit cards won't let you balance transfer anymore.
Didn't show up in Expedia's numbers, Oliver.
All right. Thanks, Kevin Hanks. Appreciate the rundown here from earnings to the macro. Good stuff this week. All right, let's talk some more with Chris Renker, Chief Investment Officer at AZA Capital Management.
Dude, it's crazy, the swings this late in the day. Went from 43% to break even right there, just on that little wick.
How do we make sense of that? I mean, was it that compelling of a story this week from Powell,
might have been
Treasury, and the data?
Maybe.
Well, I think from a trader's perspective, we saw the markets do a 50% retracement of the Fibonacci retracement of the 1-year move.
Okay,
That's
so
kind of where we saw 1 year, then we came back to retrace half the move.
50%.
That was about a 41.40 on the S&P. Now we've gone back up to the 50-day. You know, the rates move is definitely, this is all rates today, the way we would say it. We've also seen seasonality and liquidity that we saw last November too. That was kind of like the bottom for the bond market, and so things have caught a bid here. And so there may be part of this Treasury funding profile as far
Bub
as
is
like
full in his house. Were you serious? Were you serious, like you didn't know what he was talking about?
Markets for collateral. And so we had started to see some
He was saying
collateral where some of the
Jay was commenting on
was
his
changing,
food
was
looking good
trading
and
a
asked to
little
move
bit weaker.
in.
And so I think having shorter term bills available
Bubba's
is
full.
gonna ease that
Full
market a
household.
little bit. So I think there's a liquidity aspect to this, definitely a rates aspect. Some of the prints today.
And he's also
in
full of all
jobs
that
are
food
part
he's
of
been
it.
eating.
But I think, you know, the Fed's got to worry about
And sharing it in
Michigan
general, not
consumer
media.
sentiment,
Bubba shared media.
inflation, long-term
I haven't even
inflation
told you yet.
expectations, and then prices paid today.
Which is on the services side.
Services side. And that's where they got to worry about it because we've seen the shift from goods to services.
How much of this is the market saying effectively, and I'm not an anti-Powell guy, I'm not even a big critic. I've tried to give him, I feel like he's doing a pretty good job generally. There are moments a year and a half ago where I did criticize him, but you know, I don't say it from like that perspective. But is the market kind of looking at it and going, hey, actions trump words? And his words here continue to be kind of mashed potatoes, it seems like, basically since the regional bank situation. He wants to get inflation down. He says he's serious about it, but inflation's way above that level, and he's not hiking. And the jobs market and the GDP, everything else says, dude, if you want to hike, you could hike. We could probably handle it. So how much of this do you think is the market saying he's just not serious about maybe inflation?
I don't know. I think that I think Powell is a political animal too, and I think that he's trying to thread a needle. He doesn't. Anytime the Fed raises rates to these levels this quickly, you generally get a recession. The recession happens after the peak in rates, and then you see the bear market after that. And so I think if he doesn't
Read my trades today. I
as an
think
institution to
big
get
problem with
ready
today for me was just
any
position
type of
sizing,
serious recession.
and then
So the more patient he is, and look, you know, we're tighter than 5.5%.
I'm taking the profits.
depending on how you look at effective Fed funds.
So,
because of quantitative tightening.
but last 2 days I haven't been trading as much. But the last 2 days have been very red.
They have to get, you know, money
So
credit down.
that hasn't necessarily been the problem.
Is at 75% of GDP.
Because my position size has just been too big, and yesterday was different. I didn't expect stop losses. Today,
economy can grow into it. I think he really is trying to.
I did. It was just too wide for my entry for my position size. So I just was trying to recover on the account. I was trading my P&L. I wasn't trading the chart, which is ever what you want to do.
When last year very clearly
But it was kind of hard to read. I mean, we did have a lot of chop today, a lot of fake outs. So
inverse to stocks. I mean, we saw.
All right, let's take a look. Look-see.
Economy slowed down. Technically, by the old definitions, we did get a little recession there if you do 2 quarters in a row, but whatever. And the employment situation remained robust enough. BLS kind of tweaked the definitions. How come we're so worried about lag
Let's
effects
go
when
all in, baby.
A year and a half of this policy, and we're printing numbers that nobody thought possible in the economy?
I agree. I didn't see these numbers coming. What I would say is, but we just know that it's uncertain. We know that it's going to be wide. I think that the surprise has been just the strength of federal spending.
Doing it again.
The thing is that this just
Pre-flop.
reminds us a lot of 1999 to 2002.
Okay.
Where, you know, you had very high asset prices in equities. Then bonds were not overpriced. Value and small caps weren't. And so you just had this one bubble that
Look at
they
this
had to
action.
contend with. Today you have high real estate prices, high equity prices. Bonds, we would say, have normalized and are pretty much fair value. And so they also have to. So I think they want. They don't
Three
want
pocket
a massive
10s. I got
sell-off.
an
I think
ace.
they would
There's
like
an
it to
ace.
slowly come in line with longer-term
Nice.
metrics. And we talk about, you know, where rates are. They really lead to better investment decisions.
Old
because it's a
gamblers
higher
out
rate
here.
across the economy. And what they're also doing is
I think the real action you talk about
All right,
geopolitics.
I'm out. Sorry,
the real
guys.
action in geopolitics is dollar
It's not
shortage,
nice.
dollar availability, especially for China.
Here we go.
And then also this effect in rationing credit in the economy. That's the CHIPS Act. Small parts.
So
of the
first trade was until
Inflation Act.
10:46.
So the areas that, these high rates have gone up.
Yeah, I didn't
The
like
areas where they
when
went
you set
into
up
direct
here.
investment in the
Just
industrial
melted up.
side and tech side are getting subsidies.
10:46.
So I think the real political action is in Congress.
So it took a while
to
for the
effect that there's
get the
consensus
puts.
among
Could
the
have gotten puts
parties on
sooner,
how they
but
wanna deal with what's
yeah, I shouldn't be
strategically
very
important
patient
for
this
the
morning.
United States and its allies, and then also the dollar.
46.
We make dollars available to our friends and less available to people that
Those were calls.
So
Yeah, I got
part
5 of
that
them.
there is an
The right idea.
explanation of how
I had a
we
channel
are
here
so
that did
strong
break.
because they've been targeting funding.
Just lack the confidence.
Areas that were
Lack the
effectively
confidence.
stimulative with the Inflation Act, et cetera.
Hey, dare disturb me.
Makers too. The other thing
Jay from the Bay,
that,
thanks
I
for your
wanna come
membership,
back
man.
to, the bond move for a moment. You've
Appreciate
got a
it.
chart looking at the 30 years. First of all,
I don't
how
even
come the
can't even
30s? How
find
come
the
so far
stream.
out?
All my streams
Next,
have
I'm looking
ended.
at two charts.
Thanks, Jay from the Bay.
We spend so much time talking about the 10s. What do we get when we look even further?
Well, I think we've been trying to, we took a position in a longer term bond
Appreciate the
ETF
support.
in the last 2 weeks. And
Good trade.
Yeah, well, we'll see. It's
okay.
too early.
So far,
All right.
good trade.
It's too early.
Take it off.
But no, we're not going to do that.
Yeah.
We
Okay, yeah,
talk
so I
about
just
a risk
the
barbell.
confidence this
We
week, of
hold a
course,
lot of
has been
short-term
depleted.
treasuries, and we started to initiate a position in long-term
So, anyways,
treasuries.
got calls
We'd
here.
love to build it. We'd
Got
love to
dailies,
see
434s,
So
5 of them, and
what I
46,
would say is,
1052.
the long
closed
bond
them
is a way
right here.
to we think, given the risks that are
Given
out
it was
there,
chopping and
barbell, like a
building
barbell
liquidity.
duration makes a lot of
Where I
sense.
could have gotten back in was on this break,
So when
though.
you look at the 30
And I knew it, and I
Treasury,
said it,
it's
and I'm
a
like,
way
I don't
to
really want it.
take
Even though that
any
was
convexity
basically
there.
the only and best
And the
trade I
downside
saw
risk
today.
For a 1% move on a 30
Other than the
is
one, the
basically
other bullish
10%
one, but
down for a 100 basis move.
anyways, yeah, so it took a small loss there.
So the risk reward trade-off.
That wasn't the
for
one.
these
That
types of
was fine.
situations is very good. And what you see
Bought
there,
calls
I think,
again
is
at
the real yield on the
1059.
So I think
Oh, did I do this twice?
2.7% real yield might be a little bit below
Did
that
1059
today.
bought calls, 5 of them.
That's a
1104
good
sold them.
compensation for an investor in a long-term bond.
Yeah, that one I
We
just
saw what it took
I didn't like
to
the chop.
rid
I
of
just
the
wanted to get out of it.
1999 bubble
Small
was
loss,
4%.
no big deal.
We would love to see that.
Bought, yeah, so this was the problem. Bought 30 puts.
Break evens right now
So
are
bigger
about
position size.
2.5%.
It was later in the day, so they were a little bit
Anything over
cheaper. But
5%.
30
The other
puts
thing you notice
at
about the 10-year, these longer-term
1204.
bonds is during these rate hike cycles,
Yeah, this
the
one
long end
sucked.
generally comes up to the peak of Fed funds. Maybe a little
Probably
bit.
on this red
maybe
candle,
a little,
it's just
something
just
greater than
crazy.
that, but it's a good time, and this
Closed
what we
them out
saw
at
in the last 2 weeks
112.
is
Wait, no.
an extremely
Closed them out at
oversold
1215.
condition with the highest rate
04.
returns that we've seen in
Why is
in
buying puts
basically
there?
the last 20 years of this century.
Wow. That's the other chart. If we pull
There
that real
was
quick, 'cause
some
we're almost
some
around time, but
break.
I want to put that in there too because that's really important. Because that would almost kind of argue
Didn't
that the bond
stop
market
quick
just
enough.
got
I mean,
so
no, I stopped pretty good. It was
extremely
position
selling. This is
sizing,
a
really.
Z-score that goes back almost.
Right here, I
Yeah,
stopped
that-
out.
like you said,
Manually
1979,
stopped
this
out.
is one of the trends that we look at. And one way to think about it,
Yeah,
all it is a proxy for a
1215.
really quick rate
No,
hiking
sorry, up here.
cycle. And
So, just on a
long end
break.
of the curve finally caught up to the cycle.
And
so
yeah,
this
then I
is,
was down.
This is the most oversold we've seen bonds. This bond, from a
112,
trend
bought
basis, the
puts
way we would
again.
measure it on a longer term
25 of
trend.
them. So this was
very
recovery
oversold.
trade,
Last
which
thing I would say
I
is
don't want
there's a lot
to
of
call
folks
it that, but I know
right now are piling into the
mentally that's what I
2-year
was
trade because they
going
go,
for.
"Oh,
So that's
I
why I
don't
went
have
big
to make a
again.
macro call. I just have to
And
think that inflation's coming down
you know, it
regardless
actually
of reason."
it wasn't a
Seems like
bad
we
call.
have a 30-year trade, got a little bit more bearishness in the economy built
112.
in there.
This is
We
the
saw
largest
this kind of
trade
double
we've
top. We saw the RSI divergence in the 5-minute, even the engulfing candle in the 5-minute.
Is there a little bit more of
This
a
tapering.
economically bearish implication when you
So
go out, willing to go out
this
that
was a
long
nice
curve?
nice trade.
We don't know. where
112.
model
Where is
stuff
that?
is model driven, so we don't
Yeah, I
know if
waited
we're
so
gonna
long
have
this one.
stagflation or deflation.
I was down here. I could have gotten it
And so
sooner,
when you
but
get on the short
got
term
stage fright.
part of the curve in the last, we've
So
had
got it
this
here.
bond bear market. We think that higher rates
got
are
25 of 'em.
bearish for risk assets. And so this is just
And
a
nice
really a
nice
safety
little
play.
move down
We
here.
haven't
Really,
seen,
I mean, not
the
huge, but
stagflationary move or the deflationary
called.
move.
Yeah.
I think I
bounced here on
say
this
outside of the
horizontal
models, I'm more
support.
leaning toward deflation personally.
I sold
We're gonna let the
2.
data tell us what happens.
The risk of this trade is that we get like healthy see early cycle behavior.
True.
Yeah.
I'm gonna close some of these
All right.
puts.
Thanks, Chris. Great to catch up as always.
Thanks, Oliver.
Appreciate the details. All right, when we come back, let's get into the details on some of the micro.
They're up a little bit, not up 40% anymore. They're
this week
close to
and
break even.
ahead of us. We're going to talk some and the consumer from the 30.
Yeah, I only sold 2 down here out of the 25.
Spicy chicken, baby.
And so this was the part where I could have traded my portfolio and actually done better because I went from red to green. I was a little bit green here. Of course, I was thinking that was the actual reversal, and you know, we're gonna bounce up in this channel and then flush through it. Then we kind of hit here. I didn't have this drawn yet, so I thought, okay, some consolidating before we keep going. However, it could still be a bull flag, which it was a possibility. But sold 2 there, 2 more at 123. So I actually sold 4 down here. So got out of some of them. 2 more at 127. Okay, so I sold 6 down there. 6 isn't bad. I had 19 left. And that was it. I closed out the rest on the break right here. So 240. Now, yeah, even if I wasn't down in the account, and I saw it here, and I was a little late. I was planning on selling more, and it came back down and retested this. I was just not charting this channel that was being built yet because it was choppy and hard to even see. Let's see. Yeah, just should have taken more off here, and then just scaled out. The problem is after this, it was just red. The account was red the whole time, and that's where I was trading my portfolio, hoping it comes back down. I can get back green. I was even fine to just whatever price just closed out to be green. So yeah, that was where I was trading my portfolio. If I was green, then potentially I would have been better about closing before it fully broke out of that channel, and maybe on one of these bounces on supports. Yeah, there we are, back to this channel. Like break even on these puts. I'm up here, little theta decay. Still have 30 minutes to go. This is a very small position. Just something to keep me from wanting to close the stream off early. Guts, was it you? I'm sorry, man. It doesn't, like, I appreciate it, Guts. Oh, you gifted it to Jay from the Bay. Okay, that makes sense. Because it says on my feed, it says a day. It just says Guts. It doesn't say anything about... I guess it's not smart enough to know that you gifted membership. Appreciate it, Guts. Well deserved for Jay from the Bay. Burrito, Coma. Bought some for the weekend hold. Not bad. You too, Guts. Appreciate the support, man. Thanks for the generosity. Farmers Market and Renaissance Fair. Wow. Oh, the stream cancels happy. Then you'll jump on the new one. Closing some more there. Just a wasted day trade at this point. To remind me, data burn and why I should be selling premium only. Closing some more there. For the rest, yeah, close the rest. We made 6%. Thanks, Cats. Appreciate it, man. All right, GME, gap to fill. It has many gaps to fill, which we have plenty of time to do. Quite the exuberant market. they're spine testing that channel again. 330. Very well could sell off. Especially now that I close those puts. Bet the monster. That's okay, it was a small position. No fret. What a week, man. Is this all this week, dude? Oh my gosh. Yes. That is wait. That is crazy. Yeah. This is the greenest week, no doubt. Caroline was right. Look. This is all this week. Monday, Tuesday, Wednesday, Thursday, Friday. The candles just keep getting larger and more green. Green is good.
In restaurants at the moment, it's a little over 40 times EBITDA. And again, if you look at their growth rates, it's about 3 times the growth rates of the average or the median QSR peer. The next highest growth rate, let's say Domino's or Yum, they trade in the high teens in terms of EBITDA. So if we think that Wingstop can grow 3 times the growth rates of Yum or Domino's, then it should, it's so 40 times EBITDA versus a 19x EBITDA at Yum, or 17 times EBITDA is actually not very expensive.
Okay, so especially when it's category leading, right? You can't really get that anywhere else. But tell me about my Wendy's though, because it's down near the lows. It seems like it never gets a very good response by the market. Are they doing something wrong here or what?
Yeah, I mean, I think it comes down to 2 things. Number one is it's the capital allocation, right? I mean, they decided to pay a big dividend that's yielding over 5% at the moment, which means very, much fewer buybacks than we've seen historically. Second, it's, in a lower interest rate environment, as EBITDA grew, a lot of these franchise names, they could borrow more, keep the same leverage, but borrow more based on a higher EBITDA, and they would take the incremental borrowings and buy back more shares. Well, now with higher interest rates, you can't just keep doing that. If anything, you're actually trying to delever so you can, avoid a big interest impact as you have to refinance. Now, they don't have to refinance until 2026, so hopefully interest rates come down a little bit until then. But they can't really be overly aggressive in lowering that cash and not being prepared when the refinancing does come. I think that's kind of the biggest issue, for a lot of these franchise names in the sort of near to medium term. Second, there is some angst. I mean, what we're seeing is that under 75K household, under 45K household, especially, there is some trade down out of even QSR into grocery and convenience stores. So, that under 75K category household is under pressure. And so it's not just Wendy's, but McDonald's is seeing it, Burger King is seeing it, pizza guys are seeing it. And so, it is on the margin an incremental headwind for a lot of these guys, including Wendy's.
So it seems like actually there's a sweeter spot for your average ticket price and menu price in this inflationary environment to be a little bit in like the upper middle, right? Like Chipotle, Wingstop. Whereas like, if you need the McDonald's, Wendy's pricing, well, they've moved up too much, so you maybe go get groceries instead. So it's kind of an interesting.
And QSR's meal replacement, right? I mean, at the end of the day, a lot of it is meal replacement. And so it's a direct competitor almost to groceries. So so when grocery inflation is as low as it is right now versus say 6-7% in QSR, that is impacting on the margin, especially for that lower income household.
Yeah, fascinating. Okay, thanks. Nick, always a good conversation.
Thanks for having me. Appreciate
it. Coming up, let's trade some options. Back to the Apple story. Actually, a bearish trade Tom found in there today. We'll talk airlines with American too. It's a good day when American can get a little love. Investors will buy anything on this Friday.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Welcome back to Market on Close. Let's trade some options. I got Tom with eyes on the options market today. It's a big bullish day when people are even buying the airlines again, especially American. Just a non-stop meltdown in these shares for 4 months. And in the last 2.5 sessions, it's bounced back and recovered like 4 weeks, actually, almost where it was not quite, about 3.5 weeks or so.
This is one of those sectors or one of those stocks that I'm not surprised we're starting to see a big rebound in some of these names. I mean, American Airlines was trading $19 in July.
Yeah.
I mean, on a percentage basis, this is a big slide. It's down 5% on the year now.
Yeah. Well, especially with bonds rallying, because everybody hates their debt load, right?
Yeah.
So
SPY broke the channel.
Gets a little more breathing room.
What do you know?
Over 1.4 billion in debt that they've got on their sheets. Now they've been whittling that away. Remember, they had that whole grand plan to take down cost by $15 billion, and they're way ahead of schedule. But they're keeping on.
That's crazy, guys.
With that type of theme as far as efficiencies go and cost reductions, because crude oil and jet fuel prices
Imagine your weekly
up,
puts with a
elevated,
couple
so they
daily
had to
calls.
reassess their average price.
All
that
the
they paid
doctor
per
ordered
gallon
for SPY.
last quarter. They did say international travel still demand.
What earnings are
driving
after
the revenue
hours?
growth, and that's a big margin portion of their business. But those higher rates. Wages rising, fuel prices, capacity growth, also one that's been hitting the airlines. But this stock's up about 5% today, and as I mentioned, was about 19 in July. So somebody taking a shot here that over the next month and a half, we're going to see some more gains, because trader came in and bought the December 15th, the monthly cycle. The 13 strike calls, bought over 16,000 of those, only paid 25-cent debit for those on average, so that break even at $13.25 over the next 42 days. That's about 10% above the current share price, with call volume about 3 times normal daily average volume that we've seen over the last 5 trading sessions. And that's an item of note, I think, over the last couple days. Oliver, liquidity has really picked up. The breadth of this rally has really picked up. Yesterday's, I haven't seen today's volumes.
It's a big part of it.
Yesterday's volumes were 15% ahead of the estimates for the month on average through October. So big breadth, big money coming into the market, and I'm not surprised to see a name that's been beaten down.
Sure. I think a little bit unfairly too, frankly. It's been kind of mystifying how much the market has hated the airlines, and I know the Americans got the debt, but I feel like they get a bad rap. I also am flying them this week. Let's see if I keep talking about maybe they'll upgrade me.
But
Hold on, Tom.
that's another thing with airlines. The prices aren't coming down. Demand's still there.
Right.
I mean, these planes are 85 to 95% full.
This bounce has
and
been epic, man.
International business really picked up
Epic.
over the last 6 months, and that's big margin for them.
Punish them for adding on capacity into their outlook, but ultimately that should make them more money. So, it's been kind of a weird trade.
Yeah.
All right, so it bounces back. Someone's buying some.
If we get a
upside,
new high here,
in American,
like next week even,
Rumble. Let's go to another
we'll have an
one that's
RSI divergence there,
for a
a
long
bearish
time.
one.
Yeah.
And match to.
This is just
but
ripped up.
really
Or no, I'm
change
sorry.
to
Never
it.
mind.
I mean,
This is,
they've got
this
earnings
is higher.
next week.
No divergence.
Match. I
Oh,
guess
there's a divergence right now, actually.
Yeah, but like
We don't
they've
keep
been
going.
dumping,
That's a hidden one.
But I don't know what that means about.
Those are
Bumble.
hard to see.
Bumble
Let me see if that's right.
worst
I think
performer,
it is.
But I can't imagine
That's
that
going
Match
up.
getting crushed in a week where
Yeah, hidden
people are giving a
divergence.
long leash to earnings now.
That'd be a hidden
That
divergence.
says anything good about the
Higher
trading
RSI,
environment for
lower
Bumble.
price.
I think more of it's engagement.
Bearish.
Their numbers as far as the people using their platforms at
Interesting.
record levels, the
So
monetization
if we don't
of it
break
might be
this
a little bit
high,
weak at this point.
we're gonna
The
hold that
margins aren't
divergence.
that great. In a rising interest rate environment, it's
So
going to hurt
today
companies
might
like
be the
this
high.
that are trying to grow. This stock hit an all-time low of $12.38
Typically,
just on
it wouldn't.
Wednesday.
Like, you could consolidate
so it's
and
down about 34%
you'll retest
so far this
it
year.
and-
You mentioned they've got earnings next Tuesday.
It
after
probably
the close.
won't be,
That
but
might be another catalyst. You
looking at that
mentioned
RSI,
Match,
maybe.
their earnings, the big drop in Match post earnings from earlier this week, so that's going to be a concern for them. And then Elon Musk announced that they're going to have a dating service on the X platform eventually in 2024.
Way I heard it, he doesn't need a dating service. He's doing just fine.
Well, I think he is, but maybe other people do. He's trying to create this super app. Why not throw dating on there? Although, remember, Meta Platforms tried to do that. Huge failure, so we'll have to wait and see on that. But that being
that's
I don't
also
remember
like,
Facebook doing that.
Facebook, that was always kind of weird.
Yeah.
Date people I know from Facebook. I don't know, like.
So they got
family
earnings.
on there.
Earnings could be the catalyst to the downside.
Paramount,
I think that's what this trade is
15%.
setting up for. November 17th monthly cycle, so
Wow.
2 weeks to expiration. You'll capture that earnings event next Tuesday. Trader bought over 28,000 of the 12.5 strike puts for an average debit of about 35 cents. So that break even of 12.15, that's below the all-time lows that we just set. Over the next 2 weeks, that's 11% below the current share price. Put volume about 10 times normal daily average volume that we've seen over the last week of trading. So yeah, somebody taking a stance here ahead of earnings that we're going to see some further weakness in Bumble.
Okay, that's a pretty interesting find.
Yeah.
That there's so much negativity still in this stock, even after everything that's happened.
That being said, this could be a trade to kind of maybe offset maybe some potential risks to a
Rumble's down
large
today.
fund shareholder.
Interesting.
When you've got that kind of volume, we typically don't see big trades like that.
A nice RSI divergence
In a
there.
specific strike like that. It could be a money manager trying to protect maybe a long position.
Breakout.
Yeah.
Fair enough.
But he's outlaying a bunch of cash to do it.
Yeah,
Break out of that
and with
channel.
a short time frame,
Yeah.
so it kind of seems earnings specific. They're worried about something.
Did they have earnings yet?
Apple.
Yeah.
It doesn't look like Apple's going to make it today. Up down 0.75%. You know, an awkward cliffhanger in the market today. I got to say.
Yeah.
I would have thought that because the earnings weren't terrible. Look, let me just say that I've been already perplexed by how well Apple did in the past year, given that their sales keep declining. So I'm not here to say it was a good report, but by the standards of what people were buying from Apple the last year on earnings, I didn't think this was a particular bad one. And all of a sudden, it's like the best day in the market ever, and Apple's not in here?
It's perplexing to say the least, and I think I mentioned this to you on MTL this morning when we traded a few example trades in Apple using the option market, was the fact that Apple should be thanking the overall market right now, because if the overall market was flat, maybe up a little bit, maybe down a little bit, this stock might be trading below its 200-day moving average, below 165 maybe at this point, because it's being supported right now. Because you're right, it wasn't a bad quarter, it wasn't a great quarter. That's 4 consecutive quarters of revenue declines for one of the the biggest companies out there, or the biggest company out there as far as market capitalization. I think most stocks will get punished. 95% of stocks will get punished in that type of environment. Apple holds on. I'm an Apple user. I'm in their ecosystem. I'm not probably going to ever leave.
Okay.
So I'll be a revenue generator for them.
Can't teach an old dog new tricks.
That's right. But that being said, I started looking in the Apple option market because put volume is double normal daily average volume, call volume, same thing. And I looked for some unusual option activity on the downside because I still think that there is downside risk to this stock. If this market cracks or maybe starts to consolidate, you might get some more people coming out of the woodwork shorting this stock or maybe taking some profits. But I did find one, November 17th monthly option series, 14 days to expiration. Trader bought over 15,000 of the 170 strike puts for an average debit of $1. So it takes that break even down to 169 over the next 2 weeks, about 4% lower. Now, remember, after earnings last night at 4:30 Eastern time, when the earnings came out, the stock traded down to 169 in the post market on those results, and it's bounced since. So it does have that ability to go down there. It's only 4%. You got 2 weeks in this trade. And put volume pretty robust at this point, over 750,000 puts traded on the day. So yeah, there's a lot of call buyers in there too, Oliver. There always is in Apple. It's always one of the more heavily traded names in the space. But I looked for some downside put positioning here, and I found it.
Yeah, interesting. All right, so even the options not overwhelmingly bullish.
Yeah.
Okay, which is a little atypical for Apple.
Mm-hmm.
All right, thanks, Tom. Yeah, it is odd spot of red, usually one of the big winners on a day like today, but can't shake off the earnings vibes for Apple. When we come back, let's talk some more about the dollar and rates. Big story for the day. And Jenny will give us an update on what's going in and out of Kathy Wood's ARK ETF, which is having a wonderful week. We'll be right back.
All right. I think I'll stick to tomorrow. Well, yeah, today was Friday. That's why I did dailies. That's right. But I think, yeah, after 12, I think I'm going to still stick to the tomorrow's options. And I might even just do tomorrow's all day. I don't know. I seemed to have better success when I was doing that. That might have been irrelevant, but just being a little easier. Anything expiring today? Let's see, November 3rd.
Of volume, and every up week has had every down week has had higher volume than this up week has, and that to me shows short covering more than anything. Now, I'm not saying that the move in yields is 3 to 4 standard deviations over the last 3 days. I mean, that's massive. You got about 34 basis points in the belly of the curve to the downside. It will take a lot to make that up. It will take a lot of strong data. And I think, unfortunately, the only strong data we're likely to get over the next few months is inflation data when you look at what's happening with the wages. But the productivity number to me this week was the most important one. That productivity, if that's
next
real
week we have
and continues, there's your
Fed speaker on
productivity
Monday,
miracle that actually allows
Tuesday
inflation to come
consumer
down
credit,
sustainably
Fed
and
speakers.
stocks to continue to go higher. So when you compare that to the slight
Powell
slowing we
speaks on
saw in the
Wednesday.
labor numbers today, those were
Opening
positive
remarks,
but
initial
weaker.
jobless claims on Thursday.
That's Goldilocks, man. That's a soft landing. That's wonderful. The only negative to me, and it's not really a negative because I'm long it, is gold still holding in there. And I like what gold is doing relative to yields because that means it'll keep going up.
Okay. So coming back to the point about productivity, I think an understated part
Onco
of the
gave back a lot of the
discussion
gains.
data points this week, because
Still up a lot.
if there is one kind of point that will tell us what
Buy
that
coming down a little
perfect
bit.
threading of the needle would be, it's essentially
10 minutes
productivity,
Fugazi.
right? Getting stuff done at lower cost.
I'm in.
That's kind of the dream soft landing scenario. What do you then look for next to see if that can hold? I mean, we don't have inflation for like at least 10 days. The next print we get CPI, then after that PCE. So kind of seems like we got all the good stuff behind us this week.
Yeah, next week is actually really data light in the U.S. I mean, we've got Michigan sentiment, maybe that does something. Jobless claims, maybe. But again, it seems like the direction is for a soft landing. The only thing I don't like is the deepening inversion of the 2s, 10s again. Now, for the stock market, that's actually a good sign short term. Because as I've mentioned before, equities tend to bottom and actually tend to go lower than they were and then bottom out after the 2s, 10s, or after the yield curve in general comes out of inversion. So really, in a weird way, as long as the stock longs see the inversion getting worse, you should stay long. That's just a historical take. So that means that inflation is coming down and the long end is not demanding more yields based on an inflationary pressure. But the interesting part is as we get into next year, which is really what we have to start looking at now, this to me is a sign of Santa Claus coming to town, right? And November, December are historically strong months. None of the data that we've had so far, I mean, it's really early in November, is taking away any idea that November and December will be strong months. And then we start pushing into next year's view again, which just doesn't seem to me to have any sort of dread to it until we get to some of those holiday numbers, which could potentially be weaker, whether it's through inflation fatigue or whether it's through the fact that people spent their increases and now they're looking at their wages and still looking at higher prices and saying, now what?
Like it, well said. And seems like we got a little bit of clearance then if the Fed's not going to hike. We don't get big data, unless the Fed speakers suddenly hated what happened here the last couple days in markets. Should be an interesting, period here to see if Santa Claus does indeed show up. All right. Thanks, Bob Iacino. Good combo.
Good to see you, Jose.
Likewise. All right. Have a good weekend. Let's bring in Jenny Horn. Let's talk about one of the big winning factors, growth, and ETFs. The king, or rather queen, we should say, of growth ETFs, the ARK fund, Jenny Horn. All right. So Kathy Wood's flagship fund, obviously loving this market here the last few days. What are they buying? What are they selling?
They're making some interesting calls because they sold a pretty sizable stake in DraftKings. I mean, at around $28, let's call it $29. It was like $28.98 a share where they closed yesterday. So now with DraftKings setting to close out around $33 a share, doesn't look like such a great trade, but they did. I mean, we saw DraftKings climb on these really strong third quarter results. They pretty much gave really strong outlook, pretty much an A+ report from DraftKings. So that's what's leading this nice move to the upside today. But ARK divested a significant portion of their overall stake, selling around 75,000 shares, which is relatively small. It represents about 0.03% of their overall innovation ETF. The transaction was valued at around $2.2 million, again, based on the stock's closing price at around $29. But now we see DraftKings today pacing for its best day in almost 2 years, pacing to close out this week up around 25.5%, adding to its
They really putting salt in that wound.
rally and surging above its 50 and
ARK's
200
perfect timing of the market.
So DraftKings having a
isn't that
really
because they had
nice
earnings
day.
though?
I guess, when you're looking at these investments from ARK, it's more of a long-term investment. Clearly today, getting burned on this, but their Moderna investment here looking a little bit.
Yeah, they want to sell before
because
earnings.
They
Smart.
purchased around 83,000 shares of Moderna, worth around $5.9 million, also based on Moderna's closing
Right?
price of around $71 on Thursday. Now, we are seeing shares surge on the session, so this name has also had a really nice week. Not quite the same strength that we have seen out of DraftKings, but pacing to close up around 8.5% just this week alone and trading around $78. So that is looking a little bit more profitable here. Now, they are really betting on the fact that Moderna, despite the fact they have seen continued weakness from the vaccine fallout, is forecasting for this growth resurgence here in 2025. So definitely more of a wait and see story. But what's interesting is I had to look at the bigger picture here. You call this the queen or king of growth engines in terms of ETFs, but since January of 2019, the main exchange traded fund, ARK Innovation, has fallen around 5. I had to do you have to consider this though.
Friday here, that's so harsh.
This is crazy. Okay, it's down 5%. You compare that to some of the major indices ETFs. You got, I mean, the Dow ETF was up 52% over the same period. You got the S&P 500 ETF up 76%, and the Qs are up 128%. And even worse than that is if you add in the 16% loss in purchasing power from inflation over that same period, it actually puts it down more like 21%.
Jeez. All right, don't tweet out this segment because the ARK lovers are going to come after you.
The numbers don't lie. Price is king, Oliver.
And I know we're still mired, in the $30 to $50 range for the fund. So I mean, it's obviously been a pretty big disappointment.
All right, Jay.
When the
Big
market
good
had
week.
this massive rally back the past year.
You have a good weekend as well. Thanks for the support, man.
Like 5% of the all-time high if you were just in a basic index fund. So, yeah, they still have a lot of proving to do that their stock picks are going to win out over time. Because that's the other thing too, is they're supposed to be like
Discord,
long-term
indeed.
picks, And I don't know. We talked to the Moderna CFO this week, and I gotta say, it feels like they got a lot of proving to do too about what else they're going to make. We got to jump though, Jenny. Thank you very much. All right, good stuff. Schwab panel right behind it. We'll be back, and we're going to close out this market. Actually, let's bring him in right now because we're at 54. We got Nate Peterson back with us and Colin Martin. All right, the chart work here, Nate, just keeps getting more interesting by the day. We were talking about this bounce in stocks and whether or not it turns into a real reversal. Do we have to start calling it something like that here as S&Ps are almost at 4,400 and the NASDAQ's back above 14,700 handily?
Yeah, it's encouraging on the S&P to see it above its 50 SMA. It looks like it's above that downward sloping resistance line. We're approaching an area where we encountered resistance back in October. So technicals, they don't really care what happens in terms of what's moving the price or why it happened. They're just looking at price, and it is encouraging. It is a nice move for the bulls. The move is a little bit vertical, 6% this week. And, what happened? Well, it was a setup coming into the week.
A little vertical.
A lot of anxiety around the quarterly refunding program. Yes, today's jobs report was good, but it was also short covering that came in and did that as well. Look at the names like C3AI, Lemonade, Upstart, all those guys popped this week. And I don't have the data to back it up, but I suggest there was some short covering going on within treasuries as well. But what really changed this week? I think if you take a step back, the Fed's done. Well, the probabilities were already suggesting the Fed was done anyway.
Yeah.
We do have this one data point where the jobs, it looks like there's some slack there. Unemployment rate up to 3.9. That's great, but it's one data point. And what about the strikes? Is it going to come back next month? And then in terms of the Treasury refunding, yeah, it wasn't as bad as expected, but we still have this massive deficit, and there's going to be more to come down the line. So let's just take a step back. Is it worth 6% this week? I don't think so, but the market does, and I think a lot of that has to do with short covering.
Fair enough. What do you think, Colin, as far as the bond movement goes? Data, short covering, Powell, now that we've had another big move here today, how do we update the thesis?
Let's get back to VWAP, maybe.
Oliver. It's been a really busy week.
5-minute finger slap.
Nate mentioned and suggested, we already thought the Fed was done. Powell kind of hinted at that. If we go back to Wednesday, he tried to talk hawkish and talk about the door being open, but he was highlighting that inflation is coming down. And if we fast forward to today, it was a really good jobs report for the Federal Reserve. One thing the Fed's been waiting for has been that loosening of the labor market. It's been admittedly tight for the last, not just number of months, I mean, really since the whole, recovery since the pandemic hit. And if you look at today's numbers, it was pretty good. We saw a slowing in payroll gains, which is nice. We're not seeing losses just yet, although we did see that on the household survey side. But we saw a slowdown in the gains, a revision from the previous month. And then I think most importantly, we saw average hourly earnings continue to tick lower. And on a month-over-month basis, it came in at 0.2%, a little bit below expectation. So we can't say the door is shut for additional rate hikes, but we certainly think it's very much closed. Or almost closed, rather. We think it's very unlikely that they hike from here. If we look at the big move, though, I mean, we can see yields move up a little bit from here. One report doesn't necessarily make a trend. It's a step in the right direction. We think, the trend will ultimately be lower in yields from here, but it'll probably be a bumpy road. And we already started to see that as the day progressed, where we've seen 10-year Treasury yields inch up a little bit from the lows they hit earlier.
This is where my mind starts to get a little warped here, because everything you're saying is totally logical. But then the market takes it one step further, as you know, Colin, which is not to just price in no more hikes, but then to start aggressively pricing cuts. We're 525 to 550, the current target rate from the Fed. All we got to do is go out to June to see where this market gets really extreme. And right now, the odds of a double cut by June are now almost 40%. I mean, that's like borderline madness, it seems like. Where does that come from?
That's because we're going to be in a gnarly recession.
Data is as strong as
Depression.
it is. How is there any logic behind that jump?
Too psych.
Which
Thanks,
is
man.
no more hikes to doing 2 cuts?
It does seem like a big jump, Oliver. The economy is admittedly strong right now. That's why we saw the recent rise in yields, although it's basically undone. But the economy is on relatively solid footing. Now, am I surprised that we're seeing those rate cuts priced in?
And sorry,
if you asked
one
me
cut.
6 months ago,
2 cuts
or
is
one
only
cut,
10%.
10%.
Yeah, I misspoke there.
If you asked me 6 months ago, I probably wouldn't be surprised, because when the Fed hikes, there are consequences. It slows down the economy. It slows demand. It brings down inflation. The economy has been much more resilient than we expected. We saw that, but
There's
we
the
are
close.
actually starting to see those cracks now. I think it is probably early to start talking about those cuts. A lot can happen between now and next June or July, but it is possible if this trend continues. The cuts might not necessarily be to significantly stimulate the economy. It just could be a step back, so that policy isn't super restrictive anymore. Because if they hold rates steady for a while, let's say the next 6 months, but inflation continues to trend lower, that actually makes things tighter and tighter on a real basis. So it could just then be the Fed recalibrating a little bit, taking the foot off the brakes a little bit, but not necessarily in a strict easing mode, cutting rates to what we've seen over the past few rate cut cycles.
All right. Good conversation. We got to leave it there. Great stuff. Thanks for the thoughts on bonds, Colin. Thanks for your help all week, Nate. Been a rock here for us. Been a pleasure with the chart analysis and the stock analysis. All right, closing bell. There it is. A 1% gain almost in the S&P 500, and the Russell closing up pretty close to the highs, not too far off. Yeah, shedded like 50 bips from the highs, but okay, that's not that bad.
Nice, Bubba. Well done, man. Break up maple leaves. Great exercise. Yeah. Sorry to that, Bubba. Yeah. Got wrecked this week also. I'm bad on continuation days. And I have a hard time chasing. Even though it's not chasing, it's just the trend. But not to say it was just because I had bad picks. It was just risk management mostly. Lack of risk management. You can choose the wrong trade, and if you have good risk management, you can still win. It's 50-50. But yeah, we'll do it. Do it next week. Have a good weekend, guys. Thanks for support. Thank you. Guts, appreciate the gifted membership. Generosity. What a week. Strongest week we've seen on SPY. I've started to scale into puts. We'll see what happens. Very, very small amount at this point. So this could be the beginning of a big rally. Gap fill rally. Maybe even a double top up there. Really don't see it going higher than that. Or even necessarily breaking this channel. But we'll have to see. Santee might be kind. Maybe no Grinch sell-off. Thanks, Kitty. Have a good weekend, bud. Thanks, IQ Up. Good week, better weekend. Yeah, better weekend for sure. Be happy to be done trading next 2 days. Usually I'm like, oh, I want to be trading. Not this week. All right. Thanks, guys, for the support. We'll see you. Peace out.